That potentially, I think, does have a bit more weight here, because I do think to an extent that the Kremlin really does pay attention to what the public is thinking. Now, to a certain degree, they're going to dismiss, Putin in the past has dismissed public protest as not being genuine, and in some cases even fomented by Western governments, and that's a way to kind of delegitimize what's taking place. But if we continue to see lines at ATMs at banks, concerns about the economy, those are the domestic issues that Putin has tried to protect and guard against. And with these sanctions in place and the fears that are being generated by the sanctions, I think that's going to be a real concern for him in terms of how to deal with this. And I think that's some of what we're going to be seeing today in the messaging coming from the Russian government to the domestic audience.
Alex, thank you, sir. As always, Alex Brodeur, the practice head of the Eurasia Group. And Tom, just to sit on that for a little bit more time, because I think it's so important. We face financial instability risk in Russia now. That's clear and obvious. Economic pain for the Russian people. Today, waking up to see these central bank hike rates to 20%, Tom, from 9.5. That's going to hurt.
Again, and this is the mix here in the rationalization of fancy people like oligarchs that own football teams, and that they have a foreign calculation. A huge body of 160 million, whatever the number is, don't have a foreign calculation. They have a domestic calculation, and it's brutal. John, I think there's a lot of micro data that matters. I went to the Faro heart of the matter, and of course, this is south of Venice on the Adriatic Sea. Bologna, am I pronouncing that right, John?
Just about. Okay, you can carry on.
Okay. The price of durum wheat, which is what I guess you make pasta with, John, up 160% from 2016, up 70-some% in the latest surge. These are micro data that matter.
These are headlines that matter, Tom, and headlines banks never want to send out. From Raiffeisen, they say their Russian subsidiary has strong liquidity, has a strong capital position. They're things you never want to have to say, Tom, at a time like this.
Lisa Bramwitz mentioned this earlier. Liquidity is worth watching. Some of those LIBOR OIS statistics are elevated.
It's tough for those banks in Europe this morning. Raiffeisen, of course, out of Vienna. Futures down 1.5% on the S&P. On the Nasdaq, down by 1.5. I'll take a miss, Tom.
At the Keene household?
I'll give that a miss. From New York, this is Bloomberg.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping. But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan, bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali, masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Things can turn fast, and when they turn fast, it tends to be transmitted through those financial shocks.
I think you're trying to hedge broad market risk.
You need to have some exposure to value, and I think really it could be quality value.
One wants to have portfolios that are liquid, resilient, and agile in this climate.
This situation is fluid, and the narrative could change very quickly on it.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
A lot changed this weekend from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. TK equities down 1.4% on the S&P.
They're down. I'm going to call it a contained down with the VIX out 5 points. We had a 33 level on the VIX moments ago. John, the Bloomberg shows a lot of data and the correlations and cross currents of it. And I would suggest all in all, it's better managed this morning than I expected last night.
Our focus this morning, Tom, talks between Russia and Ukraine on the border with Belarus. That's where the big effort is taking place right now.
It is. And moments ago, David Hellier, John, and you've got to translate this because I think this is germane to the debates of this morning on international relations. The gentleman from the Chelsea Football Club, according to the reporting of our David Hellier, Abramowitz said to be contacted by Ukraine to help broker peace. Are we surprised, John?
I don't know, Tom. Let's see how that plays out. I've got no idea whether someone like Roman Abramovich can make that happen, because there is one man that matters at the moment, Lisa, and it's his decision and his decision alone that brought us here, Vladimir Putin in Russia.
And the isolation of him. Who is going to convince him to do something else? And there has been a number of reporting talking about how increasingly isolated he is. I'm watching Russia right now, and also from China's perspective. China has not necessarily come out with a hard line on what they want to do with Russia, and they provide a lot of their foreign currency reserves at this point. There is a big interconnection, and there is pushback internally in China against the lack of a stance.
Well, Lisa, let's do a couple of things. Let's talk about dollar ruble, that weakness we see this morning, and the central bank's response to it. To move rates to 20% from 9.5, that's a monster move.
It recognizes how monster the moves are of the sanctions and trying the efforts to isolate Russia financially from the world system. Honestly, this is unprecedented in its scope and in its potential scale as some additional sanctions are considered.
Let's work through the price action of this morning, and good morning to you. Futures are down by 1.3% on the S&P. On the Nasdaq, we're down by 1.2%. In Europe, it's much harder, much harder, with the European banks down and down hard. Into the bond market, a bid where you expect it in treasuries. 10-year yields lower, treasuries up 191.65. Treasury yields down by 4 basis points. Crude at $96 a barrel, up about 5%. And Lisa, once again, Brent through 100.
Although a lot of people are wondering why Brent isn't even higher, given the fact that there are additional sanctions. And we've been talking all morning, John, about how can oil majors avoid taking a move like BP? How can banks continue to transfer money to Russian gas majors in order to get the supplies? Today, what I'm watching, Germany's Olaf Scholz will be at the European Roundtable for Industry in Paris, along with France's Emmanuel Macron and the European Union's Ursula von der Leyen, talking about how to proceed with gas, with with other issues. I'm really curious to see what Olaf Scholz says about this pivot, committing 100 billion euros to modernize the military, spending 2% of Germany's gross domestic product on defense by 2024. That is the NATO's goal. They have missed it for years, and the agreement to supply Kyiv with military supplies, a big shift away from a very neutral stance post-World War II. We're also looking at Atlanta Fed President Raphael Bostic, who's taking part at 11:30 in a discussion hosted by Harvard about the economy. This is really a huge question. How does the Fed respond to a stagflationary event where you have inflation rising and growth coming down? Do they hike more or do they hike less? Right now, the market is pricing in a more accommodative Fed than we previously were expecting, with real yields falling yet again for all the wrong reasons. And at 11:15 a.m., President Biden is hosting a call with the allied nations on how to deal with this. Really front and focus is the gas prices, oil prices, as oil prices do surge to the highest going back to 2014, and gasoline in the United States rising to the highest since 2014, also at a time when this is going to impede directly on consumers' ability to spend some of the discretionary funding.
Lisa, thank you. A lot to watch this week as well. Payrolls on Friday. Chairman Powell speaks a little bit later this week too. Tom, dollar ruble 101.
Dollar ruble 101, and I went back, John, and I looked at the 4 terms of President Biden. He has had President Putin, and he has had a Putin devaluation. We moved from 27 ruble to the dollar out to 101, 103 ruble to the dollar, and that's a 70% plus Putin devaluation over a good 20 years.
What we're all thinking about, Lisa, is how much worse it could be. How much worse it could be if foreign owners of Russian assets were actually able to sell them today into the Russian market.
Look, why would you close the exchange in Russia if you were not concerned about an absolute tanking in the valuations?
That's why it's going to take a long time for this to play out, Lisa. The first move, yes, that's the knee-jerk reaction. It always is. But, Lisa, this could take days and weeks to figure out.
Well, and we were talking to Russ Kostrich of BlackRock, and we asked him, what are you specifically doing right now? And, John, he said he had prepared already. But do you sell this? What are you selling into? What's your conviction rate at a time when things are moving faster than we could have imagined?
Let's get to Brian Bowski, the Chief Investment Strategist at BMO Capital Markets. Brian, can we just start with the question we've asked a lot of guests over the last week or so? What's changed for you?
Well, good morning, and sorry I had to do this phone here this morning. Nothing, and you're probably not going to like that I'm saying nothing, but we don't want to be reactive. You know, the market is dealing with things right now that it doesn't know and it thinks it knows. It thinks it knows that this is going to be over kind of quickly, and that's what history shows, and we wrote a report on this last week in terms of what happens following geopolitical events, and the market tends to gravitate around things that we know. We don't know the effects of growth. We don't know the effects of inflation. We think we may know, and that's why everyone's pointing towards 6 or 7 interest rate increases, everyone meaning consensus. I'm not as clear on that, Lisa and guys, but at the end of the day, this is a reactive, momentum-driven market, has been for the last couple of years, and that is why you have to kind of do nothing right now. You don't want to make a binary decision, meaning buy or sell. You want to have those positions that you want to be in longer term, but you want to have a process and a discipline with respect to looking at companies that have consistent fundamentals, great cash flow, strong balance sheets, and great earnings, meaning strong earnings, and that's the U.S. stock market.
The U.S. stock market, and Brian, what's so important here within your optimism is we need to know how you feel about big tech, about Apple, about Amazon, because they describe what you've just described. They're getting beat up right now like the Minnesota Vikings.
Well, they are, and the Vikings have a lot of work to do over the next few years. As you know, Tommy, great to hear your voice. You know, big tech, I think, should be a part of most people's portfolios, especially if they are equity investors, Tom. And the stocks that you mentioned in big tech are those consumer staple-ish big tech names that are being kind of thrown out with the bathwater in terms of all tech. And I think you can't paint technology with one broad brush. You have to be a stock picker. And I believe the market has been discriminating to the high multiple tech areas, and that's exactly right. But I wouldn't consider these names high multiples. I would consider these names consumer staple-ish and cornerstones to either growth and or value portfolios. And so we want you to continue to nibble on these names as the market is discriminatory toward these names as they treat all tech with the same thing. But at the end of the day, we want you to be a balanced investor both in growth and value, small, mid, and large, be discriminatory in terms of fundamentals, and don't be reactive in terms of making these binary decisions of selling everything.
But Brian, there have been some pretty significant changes, and particularly with respect to sanctions, and particularly with respect to exposures of specific companies, whether it's banks or whether it's oil companies, like BP forced to sell its Rosneft share. How much do you start to factor in and game out the perspective for something similar to happen at Shell, at Exxon, and other energy majors that are grappling with a new regime?
Great question, Lisa. Again, great to hear your voice as well. I would say that, energy is 3% of the market, and it's had a heck of a run. And from our lens, we want you to be more neutral energy because of this huge move, and it's excessively consensive to like energy now. Remember, 2 years ago, energy companies were paying you to take physical delivery of oil, and we've kind of forgotten now already. And we do know that the supply issue has been where demand has outstripped supply for 5 or 6 straight quarters. We haven't seen that in decades, and we do believe that's going to roll off. Now, if you take a look at energy a year from now, oil prices are going to be lower. And so oil companies have about 12 months now to take advantage of this higher price, and they've had a poor time being able to add capital because of the whole COVID and pandemic situation in terms of getting employees to add capital and invest in. So they have to kind of hurry to get things going. In terms of the financials, this is why you want to own money center banks, because they have multi-divisional assets. And if rates do end up going lower here, the Bank of America, the Morgan Stanleys, the Canadian banks are exquisitely positioned because of their multi-divisional assets. Regional banks are going to be the ones that have harder times. So I do think that this is why you have to really focus, Lisa, on less about the sector and more about, specific names. With respect to BP and some of these other international oils, that's why you want to be more domestic and or Canadian, because you don't have the exposure with respect to what BP and Shell have. Brian, great work as always, buddy. It's good to hear from you. Brian Bansky there of BMO. I want to turn to the European banks. Some of these names, Raiffeisen down by 12.9%. Out of Vienna, out of Italy, UniCredit down by 12%. Out of France, SocGen down by 10.4%. Big banks, Tom, with a big presence in Russia.
Well, the Austrian bank, Raiffeisen, RBI space AV is a Bloomberg symbol, has a Deutsche Bank-like book, 0.38 on the Austrian bank. And John, just to show the compare-contrast here, Deutsche Bank off the acclaimed BQ function on the Bloomberg, 0.40 book value with their latest plunge. And you compare that to an American giant, JP Morgan, 4.2 times greater book value.
Crazy.
At JP Morgan. Crazy is the CFA designation.
Well, Tom, and how's it going to change? Because we started this year hoping for people who are long European banks that the ECB would hike interest rates. Feels like that story, for now at least, is gone, dead and buried.
This is the heart of the matter, and we really haven't talked about it with the news flow, John, but I don't understand how central bankers get political cover by raising rates into a war. That's original to me.
The Federal Reserve up next. Chairman Powell speaking later this week. Their decision, March 16th. Futures down 1.3% on the S&P, and the NASDAQ down by 1.2%. From New York City, for our audience worldwide, on TV, on radio, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Ukraine is holding talks with Russia today aimed at ending the fighting. President Volodymyr Zelensky questioned whether much will come from the meeting, but he says he felt bound to make an attempt if it meant a chance at peace. Meanwhile, Russia's plans for Ukraine face rapidly rising costs. Tougher than expected resistance has slowed the military advance, even though Russia retains overwhelming advantages. Russian credit default swaps are now signaling there's about a 56% likelihood of default on government debt. It costs about $4 million upfront and $100,000 a year to insure $10 million of Russian bonds. Tougher sanctions have prompted Moscow to take emergency measures to shield its financial sector. One of the penalties prevents Russia's central bank from using its foreign reserves to blunt the sanctions. And the European Union has agreed to send $500 million in military aid to Ukraine for lethal weapons. It's the first time the bloc has supplied arms to a country at war. The package may include supplying fighter jets to the Ukrainian Air Force. And the price of oil soared more sanctions were imposed on Russia. Brent futures jumped more than 7% before pulling back slightly to around $103 a barrel. Russia is the world's third largest oil producer. Any disruptions to flows could exacerbate the tightness already in the market. And Canada's TD Bank has agreed to buy a Tennessee-based First Horizon in a deal valued at $13.4 billion. The price represents a 37% premium to First Horizon's close on Friday. TD will use excess capital on its balance sheet for the transaction. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Energy sanctions are certainly on the table. We have not taken those off, but we also want to do that and make sure we're minimizing the impact on the global marketplace. And President Biden's view is the fact that we need to reduce our dependence on foreign oil, on oil in general, and we need to look at other ways of having energy in our country and others.
Jen Psaki there, the White House press secretary from New York, with futures down a little more than 1%. We're off session lows. On the Nasdaq, we're down by 1.1%. In Europe, down more than 2% in some places. Into the bond market, a bit into the havens, a bit where you expect them. 191.50 on 10s. Yields lower by, let's call it 5 basis points. Crude at 95.94. We're up there by 4.73%. And dollar ruble, Tom, we're looking at a move of about 20%. And a move from the central bank to take interest rates to 20% from 9.5.
Range bound, I'd call it here on dollar ruble. Also, we quote euro ruble in a so-called ruble basket as well. But on dollar ruble, it is at a 103. And with what, John, overnight Sunday, obscure bank tweets was out at 170, I think it was.
Oh, Tom, I mean, at the moment, what have we got? What kind of trades are we looking at the moment? If you're a holder of foreign assets, we keep saying of Russian assets, a foreign holder of Russian assets, and you can't sell them right now, it's dollar ruble at 98, a decent read of what's taking place?
Yeah, we're going to have to see. Let's do this. We got so much to talk about. I'm going to come in here with an interesting angle, if you will, with Anne-Marie Horton in Washington. And Maria Tadeo planted in front of the water fountain in Geneva, which is a beautiful shot for those of you on radio. Clearly, Maria has a lovely day in Geneva. Anne-Marie, I'm going to go to your expertise here, and it can be on the gentleman of the Chelsea Football Club. It could be on the guy of aluminium. But what I'm really interested in is Mikhail Fridman, the oligarch, and his comments. He grew up in Western Ukraine. His parents live in Western Ukraine. And these three guys, led by Fridman of his bank, Alpha Group, they're going after their guy.
Well, yes, and they're doing it in a very diplomatic way, but they are certainly stepping up. I mean, the response from oligarchs as well as Russian celebrities has not gone unnoticed in the press. Friedman writing a letter to individuals in his company. Tom, you're right, talking about how he's actually Ukrainian and Russian. His family is still in Lviv. Right. Lviv is his favorite city. And then you have Oleg Deripaska on his Telegram channel. I was just viewing it because I subscribed to his Telegram channel. And he's talking about an end of all of this state capitalism and that it's necessary to change the economic policy. That's what he says today. Over the weekend, he was also calling for peace. And then you have Roman Abramovich being called by the Ukrainians to help with a peace agreement. The oligarchs at the moment are starting to step up and voice their opinion about this war.
Maria, how does that fit in with your day in Geneva? If the capitalists, I guess I can call them that, of the Russian Federation, and even some reports of the military looking at a very lonely Putin, how does that fit into the complexity of this Monday?
Got no audio there for Maria Tadeo, Tom.
We've got a loss in audio there as well. Could have been the Chamber of Commerce of Geneva. Let me go back to Anne-Marie. Anne-Marie, I think you heard that same question as well. It folds into the complexity. Does Mr. Putin call up the gentleman from the Chelsea Football Club and say, hey, we're on your side, what can we do?
This is going to be a difficult position for the oligarchs. I mean, we should note that they're taking huge gambles by speaking up right now. Putin has an incredibly small inner circle. What I'm hearing is that it's likely just individuals from the security apparatus, the FSB. You saw that meeting he held with a number of oligarchs. Oleg Deripaska was actually not at that meeting, but a number of them were there, like Igor Sechin, Elekparov, a number of individuals. And Putin basically said to them, I had no choice. I had to do this because he knew it was coming. And that was going to be crippling economic sanctions and those individuals being cut off from Western financing and the likes. We have to see where this plays out, but it is, I would say, the first time, having really watched Putin and the oligarchs and the business community interacts there, never publicly you would hear these statements. Potentially a little bit in person, you can get a sense of where people stand in terms of how they feel about the president since 2014, especially the annexation of Crimea. But never publicly you're seeing this kind of pressure on President Putin from the business elites.
Maria, let's try you again. We hear that the audio has been restored. What is the sense among European leaders about the unity there when you start to talk about some of the sanctions that will have not only harsh effects on the oligarchs and others in Russia, but also on themselves?
Yeah, and you know, to answer that question, I think we've seen over the past 24 hours incredible unity from the European Union. But to go back to the point that Tom made about how are oligarchs perceived here in Europe, what an official told me yesterday is that the party's over. If you want to get on a private plane to go to Cannes to have a nice day, well, that's not going to happen. If you want to go skiing right now in a nice chalet in Courchevel, that's not going to happen either. So this is going to have a real impact on their everyday life and their lifestyle. But they do say you have to be very careful about not overplaying and overhyping the oligarchs, because the only reason why Deripaska and why, of course, Abramovich are rich is because they're close to Vladimir Putin. Their fortune, in some ways, belongs to Vladimir Putin. So they always say, I would not play up the oligarchs facing up to Putin because they know what they owe him. And they also say the protests that we're seeing in Russia, of course, it takes a lot of courage to do this, but we've seen this play out before. We would need to see a level of social unrest we haven't seen in Russia for about 20 years to actually believe that this can change and force change from the inside. If anything, the focus is on the military and the Russian military, whether they believe that it's worth sticking with Putin.
Maria, thanks for sticking with us. Maria Tadeo out of Geneva this morning. Anne-Marie down in Washington, D.C. Getting some comments from Stanaris of the ECB, the governor of the Bank of Greece. Stagflation in the short term. The call coming out of an ECB member this morning, Tom.
I have trouble with the word stagflation here, John. I get the idea, the dynamics here of slowing growth and higher inflation, but the jump condition here is so much more than the way I perceive Lawrence Summers talking about stagflation. I look at that as a more gradual process, a more normative, economic dynamic. We're not dealing with that now. We're dealing with war, and I don't know if that's a growth crush, a growth collapse, or a general slowdown, but to me it's not stagflation.
I think it's a short way of saying, Lisa, we're going to have growth problems and higher inflation.
Yeah.
Well, and Sarah House addressed this. At what point does stagflation turn into recessionary fears? And she said we're quite a way away from that because of the strength of the consumer, because of what they've been able to absorb. If gas, though, gets to $4 or $5 a barrel, how much does that equation change? I mean, how quickly can we see that shift at a time when we're still recovering from a pandemic?
Well, it goes back to that Jeff Curry note over at Goldman Sachs. They upgraded their forecast short-term call for Brent to 115 from 90-something. And Lisa, they basically said, barring a breakthrough in peace negotiations, the only way to get this one back down is to get it up high enough to cause demand destruction, and that's the rebalancing mechanism.
And take it a step further, if it hasn't caused demand destruction at this point, how much further does it have to go in a dynamic economy that is growing to get that effect?
Futures recover a little bit here. We're down by 0.9% on the S&P. Over in Europe, the stock 600 down just 1 full percentage point. The talks this morning where the focus is between Ukraine and Russia on the border with Belarus. Any headlines when we get them, we'll bring them to you. From New York, this is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Live from New York City, here's the price action. We recover off session lows just a little bit, down about 1% on the S&P. On the Nasdaq, down by 0.9%. Some headlines just dropping across the Bloomberg. Allow me to bring them to you. The US banning transactions with Russia's central bank to allow some energy-related transactions with Russia. US sanctioning Russia's Ministry of Finance. Tom, these sanctions continue. The actions are effective immediately. Just to say, Tom, they also sanctioned Dmitriev, a close ally of Putin as well. The sanctions hit Russia's National Wealth Fund, Russia's Direct Investment Fund, the Ministry of Finance, the central bank. I mean, take your pick, Tom. These headlines just drop in now.
They've got to go with the Russian central bank, is to me, John, the lead here as well. And again, they're going to dovetail into further sanctions and further headlines through the evening in Europe. And to me, John, what we saw moments ago before that on the embassy in Belarus is just as important.
They are going to do what, Tom? Remove their staff from that embassy in Belarus?
The U.S. is, I believe, going to remove staff from Minsk, and to me, that's a big deal. I mean, and I'm looking here at ruble. I haven't even had time to look. Ruble's pretty much unched here off of where it's been with a 19 big figure move. But,
yeah.
John, these kind of headlines continue to add weight, a cumulative weight.
Elisa, those transactions with the central bank, and this headline right here, to allow some energy-related transactions with Russia, a minimal energy carve-out, whatever you want to call it. I just wonder how this is going to work in practice. This is the theory. How does it work in practice?
If you're banning transactions with specific banks, let's say those banks do business with specific oil companies, how do they end up transferring the funds if there are sanctions that are unrelated to oil? It's just an incredibly complicated mix at a time when it does seem like Moscow is all the more isolated.
Futures down 0.9 on the S&P, on the Nasdaq down by 0.9% as well. We'll stay on top of those headlines for you. Let's get you some single names, some movers. Here's Kriti Gupta.
Yeah, John, let's just talk about the purchasing power and simply what you're going to see and how the read-through is as you start to see Russian purchasing power decrease, what the read-through is into the United States. And here are some stocks that actually show that. McDonald's, for example, down 1.4%. Remember, 9% of their revenue comes from Russia and Ukraine combined. A similar story when you look at Coca-Cola, down 0.5% in the pre-market. About, I'm looking over 20% of their volume comes, once again, from Russia and Ukraine. You can't forget Yandex, of course, the Russian search engine listed here in the United States, down a whopping 21%. Tom, John, and Lisa, just 2 sessions ago, this was trading at double the price. Let's talk about some of those defensive names, though, because those are also moving quite a bit in the pre-market. You are seeing quite a bit going into the defense names like Lockheed Martin. Raytheon is another example of that, as well as those energy names that are following Brent and WTI even higher. But remember, the ones that have far more exposure to the United States, those are getting the bigger bid. For example, Occidental up 0.5%. I'm going to end here with BP. Of course, we know as they look to offload that Rosneft stake that they have, a 20% stake stake in that state-owned oil giant, their stock is actually dropping 7.2% in the ADRs.
Kriti Gupta, thank you so much. Greatly appreciate it. Right now in foreign exchange, Jane Foley joins us, head of foreign exchange strategy at Rabobank, with all of Rabobank's commercial relationships across Europe. Jane Foley, from your strategy standpoint, what is the state of liquidity within the European financial system?
Well, I think the liquidity, quite clearly, there is none really in the Russian ruble, or very, very little. But I think if we move into the agricultural space, I think that's where perhaps the spotlight is beginning to shine. Certainly, it can be a little bit more difficult. We're not used to having crisis that affects agricultural prices or commodity prices in this area. So we are seeing signs of a little bit of stress, really unfamiliar conditions in those sorts of markets really throughout.
We've been talking, Jane, about how ruble will open for trading beginning last evening, 6, 7 p.m., whatever time that was. Is ruble fully open for trading from where you sit?
I don't think it's going to be fully open really for a long time. You've got to bear in mind that because of the sanctions, so many banks are just unable to trade with Russian counterparts, and therefore automatically you get a real crushing of liquidity. So the prices that we see on the screen, just seem, well, we've seen an enormous spread traded in the course of today compared with where we would normally see the Russian ruble. But again, that's just a reflection of the fact that very few people are able to trade it right now. So that really is not a proper market, and it's probably going to be like that for some time.
Jane, taking a step back, over the weekend, the backdrop changed materially in a lot of people calling the U.S.'s actions and Europe's actions a weaponization of the hegemony of the dollar, basically saying that they are using the dollar's predominance here to push Russia out of the financial system, and that it would have ramifications longer term for the dollar and it would weaken it. We're not seeing that in the market. It's quite the opposite. But do you think that there is validity to this argument?
That is an argument that is not new. That is an argument which has been going on really at least 8 or so years. Or, we can take it back to the Crimea, for instance, 8 years ago, where Russia really then tried to protect itself against some Western sanctions, really ramping up those foreign exchange reserves, increasing its self-sufficiency in food also, and also trying to have more invoices that were not US dollar denominated. Now, the dollar is, of course, the primary currency in the global payment system. That is why sanctions have been used by the US government, to such an extent. Think Iran, and certainly it is a weapon, if you like, to try and force another country to really back down on what they want to do. And it's been used very powerful in this instance, and really, with the blessing of all of the US's Western allies.
Jane, there's a concern that there will be frictions. There'll be huge liquidity issues within the major markets, money markets, dollar financing.
Okay, traders, hello again. As you can see, Japanese yen moved lower. Let's wait what's going to happen later. For time being, I'm going to cancel the order to sell short Japanese yen. Okay, guys? So please cancel this order, and I'll speak to you later, guys. Stay safe.
In a few days' time. So the fact often that the Fed may promise that it's there, that these liquidity lines are possible if needed, could be enough to see the tension. So this is really about stopping market panic. And we've got to remember that, yes, on Friday we did see some ports being shut down in the Black Sea, but right now we don't have a huge amount of disruption yet to food, certainly, or energy, and this is where the panic could come from, and this is perhaps why some of the sanctions that have been announced with respect to the SWIFT system haven't yet been universal. I think Europe would like to know that it can still get its hands on some Russian supplies of energy. That's really necessary for a country like Germany, which of course has a huge amount of industry which will be using Russian energy. So it's really important how it's managed to stop that panic that may then require some of those extra liquidity lines.
Jane, just to build on something you mentioned earlier, the ruble's not a proper market, certainly not this morning, and to build that out just a little bit more, when foreigners can actually sell their Russian assets, when the market reopens again, what kind of pressure would you expect on this currency?
a huge amount of pressure. We've seen, for instance, that the news from BP, that's just one that you mentioned a little bit earlier on, selling its Russian stake. I think also that the Norwegian Sovereign Wealth Fund, the biggest sovereign wealth fund in the world, and it wants to sell its Russian assets. It owns bonds as well as a lot of stocks in Russia. Those will be going. Now, even if it's delayed, not just today or another few days, at some point that selling will come, and therefore we can expect a lot of downside pressure on the ruble.
Jane, thank you. As always, wonderful work out of London. Jane Foley there of Rabobank. Some of these headlines out in the last 15 minutes, widely expected, some of them not. Allow me to read them for you. The US banks bans transactions with the Russian central bank. Lisa, sanctions a close ally of Vladimir Putin, the Russian president, sanctions the Russian Ministry of Finance, sanctions the Russian National Wealth Fund, sanctions the Russian Direct Investment Fund, just on top of the effort we've already seen over the weekend.
Over the weekend, I was really struck by some of the notes saying that we've been focusing so much on the SWIFT financial system and removing Russia from that, but really banning transactions with Russia's central bank is possibly more consequential for the nation and possibly could have greater ramifications. We'll see, but it really does feed into some of the liquidity stories we've been talking about today.
And there was a briefing this morning with reporters from U.S. officials. Our team down in Washington putting out a couple of those quotes, Tom, from U.S. officials. Here's two. No country is sanctions-proof when we act together. Fortress Russia will be shown to be a myth. The strategy from the U.S. is, quote, the Russian economy to go backwards as long as Putin decides to go forwards.
Yeah, dead on, John. And you and Lisa really emphasize this more than me. And this is not just official sanctions, but the individual actions of capitalism against this war. Here is Christine Lagarde's law firm from decades ago, John, her tenure in Chicago with Baker McKenzie. And this is Catherine Gemmell out of London. Baker McKenzie to cut ties with Russia clients is sanctions bite. That in itself is a sanction from a major global law firm.
So there is supposed to be an energy carve-out here, Tom, and what's going to be really interesting is to see how much this spreads beyond and into energy as well. When you disrupt capital flows, can you make sure you carve out, Lisa, one particular part, one specific part of an economy? And I would suggest that's very, very difficult to do.
Especially if a lot of companies, as you pointed out, are self-sanctioning. They are avoiding really getting in the crosshairs of any of these regulatory issues, especially even the likes of China. There was reports that China's state bank stopped providing certain payments, funding for gas purchases and oil purchases in Russia because they didn't want to get caught in the crosshairs of the U.S.'s sanctions, just giving a sense of how far this can go.
Well, as Jane Foley just pointed out, Tom, we've still got the Norwegian Wealth Fund that needs to sell down assets. We had BP move on Rosneft announced that.
Yeah.
They didn't have to. They faced pressure from British politicians. Others will too. Shell was in the news over the weekend as well.
John, I'm going to have great respect for the black market, and on Sunday that unofficial market was $150, $170 ruble. Right now 104. Maybe a cut in between, and that's another 30 big figures south.
Big conversation coming up later in the next hour. Dan Yergin of IHS, the master of the crude market. Looking forward to that a little bit later. Crude right now up 4.4%, 95.64. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. Officials from Ukraine and Russia are meeting on the 5th day of the Russian invasion. Ukrainian President Volodymyr Zelensky is skeptical that the talks will lead to results, but he says he's willing to try if there's a chance for peace. Meanwhile, more sanctions have been imposed. The new penalties target Russia's central bank, plus some Russian banks have been barred from the SWIFT messaging system. Russian markets were paralyzed and traders struggled to price the ruble today. The Russian currency lost a third of its value in offshore markets. At one point, it hit an all-time low of 109 per dollar in Moscow. The central bank more than doubled its key rate to 20% and introduced some currency controls. And leasing firms may have to recall jetliners worth billions of dollars from Russian airlines. Sanctions imposed over the Ukraine invasion threaten carriers' ability to fund and operate rented planes. More than half of the active commercial aircraft based in Russia are leased, mostly from companies based abroad. And BP has moved to sell its shares in Russian oil giant Rosneft. It may take a financial hit of up to $25 billion by joining the campaign to isolate Russia's economy. BP has been in Russia for 3 decades. Just weeks ago, it was staunchly defending its presence there. Canada's TD Bank has agreed to buy Tennessee-based First Horizon in a deal valued at $13.4 billion. The price represents a 37% premium to First Horizon's close back on Friday. TD will use excess capital on its balance sheet for the transaction. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
European Union steps up once more its support for Ukraine and the sanctions against the aggressor aggressor, that is Putin's Russia. Under this package, important Russian banks will be excluded from the SWIFT system. We will also ban the transactions of Russia's central bank and freeze all its assets.
The US and the EU moving in lockstep at the moment. Ursula von der Leyen there, the President of the European Commission, with futures down 0.9% on the S&P. A similar move on the Nasdaq 100 as well. That's the story for equities. For the bond market, yields down 4 or 5 basis points. Commodities crude up to 95.64, up 4.4%, Tom. A big move on dollar ruble, up about 20% on that currency pair.
Well, a big figure move, and at 101, 102 right now. Ruble's been range-bound here in the last number of hours. I'm going to call it, John, would you agree with me, markets range-bound within all of the news flow we're seeing?
Sure, after a massive gap at the open, Tom, yesterday evening.
What we've wanted to do through the weekend with Lisa, John, and I working with our team in London and in New York is to bring you the best voices we can find in economics, finance, investment, and yes, in this war, in our combined international relations. And suddenly, in the last number of days, the word nuclear has come forward. Hans Christensen is definitive in researching nuclear. He's director of Nuclear Information Project. He is iconic to his time decades ago with Greenpeace, and we are Greenpeace, I should say, and we are honored that he joins us this morning. Hans, before we went to air, we moved away from the continent of Europe to what is a Hollywood movie, except it's not. And that is our submarines and their submarines. Are their submarines, given Mr. Putin's rhetoric, a threat?
They are if they're used, that for sure. We don't hope it doesn't come to that level, of course. But we hear indications this morning that the defense minister in Russia has reported activities of the strategic nuclear forces. We don't know, we haven't seen it confirmed, we don't know what it is. But if it involves the ballistic missile submarines, of course, in the Northern Fleet and the Pacific Fleet, then it means they would be taking steps to increase the readiness of their nuclear forces.
To more conventional warfare, and folks, I should mention that Dr. Christensen is the kind of person who counts satellite photo images of Chinese weapons. He's that particular about counting the beams. What does dual capable mean? In the fear of those weapons in Belarus and Russia, what does this word dual capable mean?
It means that the launcher of the weapon is capable of launching a weapon with a conventional warhead as well as a weapon with a nuclear warhead. And so that can create some misunderstandings and overreactions, of course, if there's a tense nuclear crisis going on. You don't know what they really are launching, but so far we have not seen movements of nuclear custodial units in the context of the Ukrainian crisis for these types of weapons that are there.
Hans, the prospect of a nuclear altercation is so nerve-wracking that people don't even want to talk about it. We haven't heard about it that much, at least publicly. If you talk to a lot of market participants privately, they raise this first up, that this is their biggest concern and their biggest tail risk. You still think it's unlikely that it would come to that and that it's mostly just rhetoric. Why do you think that it really won't escalate to the degree that a lot of people are worried about?
Because rattling the nuclear sword is sort of a normal part of the Russian way of doing business. This is one step further, I would say, but it's still far from an actual exchange, of course, for the simple reason. It's hard to see any real justification that such enormous destruction would be justified by any of the things that are going on right now, despite what's happening in Ukraine.
Well, but Hans, this was the rationale behind why a lot of people thought that Putin wouldn't necessarily invade Ukraine on the timeline that they did. And now people are wondering whether Vladimir Putin is in fact a rational actor, whether he is going to respond in a predictable manner. Is there any sense about the operations below Putin possibly not responding to his command or any kind of upheaval? Or are people very concerned about the irrationality that we just talked about?
Yeah, definitely. There's a sort of a new level of whether he's in a bubble, cocooned in there with his advisors and doesn't quite sort of see the picture. But still, nuclear is at a level that is far beyond what is happening right now. So that's why I'm sort of confident that we won't get to that level.
Again, you have decades of experience in what is so emotional for us. Explain to us, Mr. I believe I'm pronouncing it correctly, Valery Gerasimov head of the Russian military and the Russian military's relationship with Mr. Putin. Explain that from your vantage point.
Well, it's a very small circle of people. They've been there for many years, and it's not like you have a group of people that seems to be giving him frank advice and disagreeing with him. It's more like these are his people that are carrying out his orders. And so that's kind of the most dangerous of situations, because you can sort of get into this, into this vortex where things are sort of getting more and more weird. And that seems to be what's happening right now with the nuclear saber rattling.
A depressing conversation at the moment, Hans, that's for sure. Stay close, we'll catch up with you soon. Hans Christensen there of the Nuclear Information Project. The headline that's just come from the Wall Street Journal: the US informed Saudi Arabia of a possible coordinated stockpile release, according to sources over at the Journal, Lee. So just to repeat that, the US informing Saudi Arabia of possible coordinated stockpile release.
Yeah, this has been something that a lot of people have been expecting in order to offset some of the increase in crude prices that we've seen. We're also getting headlines about OPEC Plus set to boost output by 400,000 barrels a day, which is in line with predictions. How does Saudi Arabia factor in? If you have a coordinated release, is the U.S. trying to say, if you don't provide more supply, we will, and we'll benefit from it, so get on board?
The sources indicated for a while, Tom, that the president would tap the SPR again. We've been talking about that, I think, for much of the last month. In fact, year to date, we've talked about it over and over again. I would suggest it did not do much at the end of last year when this happened.
You suggest correctly.
And I would suggest that this potential to do something now is limited too.
Far more interesting to me, John, and I think the whole SPR thing, not that I'd editorialize ever, John, but it's just total baloney. But we were talking about Bologna earlier in Durham wheat, up 16% in Chicago. But John, what's so important to me is this new phrase, OPEC Plus. Says who? Where OPEC just everyone else is removing themselves from Mr. Putin. Why can't Saudi Arabia as well? It's fascinating.
Well, the issue at play, Tom, has been that they haven't hit their output targets. Even if they were increased, would anyone hit them? And who's got the capacity to actually hit? Brent crude actually comes off the highs off the back of some of this at $100.58 now, up by 2.7%. WTI with a 95 handle, Tom, 95.26 and up about 4%.
Yeah, the market, as a general statement, the VIX, John, just as one thermometer from a 33 level into a 31 handle right now. Again, I would say in the uproar of the weekend, John, it's a very contained, range-bound market. But help me here, Lisa and John, if we don't have headlines out of these talks on the border, do we?
Not yet, no. Yeah. And that's what we're waiting for. So that's the main event today. We have these talks between Ukraine and Russia at the border with Belarus. Tom, we know what the Ukrainians want. Full troop withdrawal, ceasefire right now. What do the Russians want?
What do we see tonight in the Kyiv and the Kharkiv night? I mean, terrible.
Futures recover a bit. We're down 0.9%. I won't make too much of that. Crude 95.29, up 4%. From New York, this is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Things can turn fast, and when they turn fast, it tends to be transmitted through those financial shocks.
I think you're trying to hedge broad market risk.
You need to have some exposure to value, and I think really it could be quality value.
One wants to have portfolios that are liquid, resilient, and agile in this climate.
This situation is fluid, and the narrative could change very quickly on it.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio and television. Again, an historic Monday. Headlines coming in across all of the Bloomberg world. John, moments ago, Russia bans airlines from 36 countries for using its airspace. It is a tit-for-tat Monday.
They react after many countries did the same to them, Tom. The Central Bank of Russia reacting as well, taking interest rates to 20% from 9.5%. We have a news conference starting with the governor of the Russian Central Bank right now, TK, so look out for headlines from that. And here's a headline from Dow Jones. We talked about it briefly in the previous hour. Let's do it again. U.S. and major oil consumers mull releasing 70 million barrels of oil. So this is a reserve release, again, potentially, Tom, on the table.
Brent crude, $100 a barrel, I believe, $4 higher earlier. And again, Jeff Curry, John, modeling out as all of our audience, all of Global Wall Street, remodeling, readjusting this morning.
Well, Jeff Curry goes to 115 in the near term. That's his 1 month price target. But what he suggests in his research, Tom, released over the weekend, and I think it's fascinating, what they're actually saying is the only rebalancing mechanism left in this commodity market is demand destruction. Not a supply story that gets boosted, but demand destruction. And that's the fear that a lot of people would have, Tom.
Right. Here we are capturing the moment. This is the woman who's head of the Bank of Russia. She's a legit economist. Elvira Nabiullina is speaking in Russian. And John, to link this into the collapse of Russian society, she was the leader of Sberbank for a good amount of time.
Well, her central bank has now been sanctioned, TK, and we talked a lot about this through this morning and over the weekend. Those new sanctions in theory, how will they work in practice? What does it mean for her central bank? And ultimately, What does it mean for the economy?
Lisa, and we'll show this on television and radio. All you need to know is Off a Cliff describes a chart. I mean, Lisa, to see Sberbank is just one tea leaf of the collapse of Russia capitalism.
Well, and we can't get that many other tea leaves because for all intents and purposes, the markets for Russian assets are pretty much closed, whether in actuality or in practice, simply because people don't know where to trade them. How do they then support an economy that's getting increasingly isolated? And what does that mean to John's point about the transmission of gas and oil deliveries at a time when they can't necessarily be receiving the payments necessary to compensate them for those deliveries?
And this from Scandinavia, John Ericsson, to suspend all deliveries to Russia. Just another example of the moment.
Well, this starts to build, and Tom, I keep going back to this because I think it's so important. We've talked a lot about an energy carve-out, and I'm thinking about self-sanctioning. How many banks just pull back wholesale from dealing with anything to do with Russia? We saw the headline about BP's effort to ditch its Rosneft stake. That's really important to BP. They're walking away from it. What they get for it, Tom, I have no idea. One headline that the central bank governor just mentioned, TK, so I've got two now. New sanctions have limited our use of reserves, that we know. She goes on to say rates need to compensate for higher inflation risks. So that's where the effort will be through interest rates, and they have moved already
we can get
in a substantial way.
Yeah, dollar ruble moves. There's no other way to put it, folks. I want to point out U.S. dollar versus ruble, a 108. That is a substantial move here as we begin to hear from the head of the Bank of Russia. John, let's go through the data quick to get to Vichy. It's just so important to have a conversation. I'm going to look at a VIX that was 33, went to 31, and it's turned around here with these comments from the Bank of Russia.
The future's down by 1.2% on the S&P 500. Talk of a reserve release from some of the major commodity producers. What's that going to achieve? We'll see. 95.12 on WTI right now, up 3.9%. And this is central bank speak for a really tough conversation, Tom. The financial system is facing a non-standard situation. The line from the Russian central bank governor, I think that perhaps understates the situation.
Ruble 108 out to a weaker 109. We'll monitor that through this hour. A perfect time to speak with Vichy Chirapatar, Global Director of Fixed Income Research at Morgan Stanley. Vichy, an open question. What was your morning call like?
It's particularly challenging, Tom. I think as we all get caught up in the markets and the economies, etc., you know, these developments have a substantial human cost that we should not forget. So that's at the top of my mind is the tremendous human cost that all of these things will entail. But in terms of the markets, there is a substantial tension here between growth and inflation, and that's it has, on the other hand, on the one hand, a lot of these things will lead to higher prices, higher inflation, at the same time, then a negative on the growth front. So I think it's a particularly challenging for the central bankers to manage this conflict between the trade-off between growth and inflation.
Do we just assume, Vichy, that inflation hurts growth? Is that just the base case assumption now that we've got to move up our inflation forecast and move down our growth outlook?
It's yes, broadly speaking, yes, but I think it's not uniformly across the world. So certain regions have a much bigger exposure than obviously Europe does, and we think that the net effect of the higher, say a 25% increase in energy prices and the effect on the consumer and business confidence in Europe could shave off maybe 1% of growth in the euro area for 2022 and 23. On the other hand, in Asia, the effects are much more muted. And the U.S. is somewhat in between those two things. I think the near-term economic growth is on a firmer footing in the U.S., but we will really be watching how financial conditions or they develop over the course of next few weeks and months.
Vichy, do you think anything changes for the Fed? Goldman came out, Jan Hansius and the team, and upgraded their PCE forecast to 3.7 for the under 22 from 3.1% previously. They've kept 7 hikes for 22, threw in an extra hike for 23. Does it change anything?
So we think that what changes is what it does not change and what it changes. It does not derail the removal of the policy accommodation altogether. It does reduce the chances of particularly aggressive removal of policy accommodation from the from the DM central banks in general, including the Fed. So we expect that the next couple of months, the next couple of meetings, the 25 basis point hikes that we expect to see, that we had been expecting to see in the next couple of meetings, will continue to be there. Our economists have not revised their full year path, which is 6 hikes for 2022. They have not revised it up or down. I think what we would be looking to see is how financial conditions, particularly to the access to credit markets, will evolve over the course of next few months. So near term, very much on track. How this will translate in the future depends upon how financial conditions will evolve.
Vishy, to build on that, how constructive are you on credit, on the corporate default risk, given the fact that we now have a double whammy of both faster inflation and slower growth because of what's going on?
So notwithstanding the two factors that you just mentioned, if you compare where we are in the credit fundamentals from all the previous episodes of where policy tightening, at the onset of the policy tightening, the fundamentals are in a much better shape. Lower leverage, gross leverage, and net leverage, significantly better coverage, and cash on debt ratios are all significantly better today than they were either even before COVID onset in March of 2020 or before the onset of any of the previous hiking cycles. But the challenge really is a bit more on valuation. Fundamentals are fine, and I don't think that this will, at least what has happened so far, we will engender a spike in default rates. But valuations, we think, still have adjusted quite a bit over the last week. We think there is probably more adjustment in valuations that are still required.
Vishy, awesome, as always, buddy. You know, we appreciate your time. Vishy Tripator there of Morgan Stanley. We're all trying to work out what this means. Dollar ruble with a 30% move now. Out to 110 briefly, right now 107. This is what the central bank governor of Russia has got to say about the situation, calling it a non-standard situation. That understates the difficulties of Russia right now, going on to say that all banks will continue servicing liabilities, the central bank recommending that banks restructure loans. Just on FX interventions, and this is fairly intuitive for people in the business who understand all of this, but to explain it, Tom, the central bank has been sanctioned. That means that basically today, without access to a lot of those reserves, no interventions in the FX market. They did conduct FX interventions, Tom, on Thursday and Friday, but as the central bank governor suggests, no interventions today because of sanctions. And that's the difficulty you have stabilizing the currency, Tom, and why the efforts on rates to take them from 9.5 to 20%. That's why the effort's there on rates.
And I go to Javier Blas, who's talked about 3 days ago, John, the reality of margin calls and how the commercial space folds into the economic and central bank space as well. John, the U.S. 10-year real yield has plunged in the last 5 minutes. I'm using that word judiciously, and it's right down to pretty much the support that we've seen over the last 5 days, rounding down to a negative 0.70%. I'm not going to link that to ruble, but I just think it shows the tension we have as the central bank, the Russian Bank of Russia head speaks now.
Can I just make a point as well, Tom, that by the time we've worked through all of this, I have no idea where it ends, and I hope it ends soon for everybody's sake in Ukraine, Tom. By the time we're done with this pandemic looks like it's over because the exclusive focus of news coverage is on this, as it should be. But in the background, Lisa, the governor of New York, Kathy Hochul, saying that it's time for school districts to make mass decisions just slowly, day by day. More of these restrictions are getting peeled away as our focus is elsewhere.
You know, we would be focusing on this. It would be the top news if it weren't for Ukraine, Russia. It's over, and yet we're on to the next crisis.
Futures down a little more than 1% on the S&P. We'll focus on sanctions with a sanctions expert, Dan Tannenbaum of Oliver Wyman. Next, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Ukraine began talks with Moscow in a long shot bid to end President Vladimir Putin's invasion. President Volodymyr Zelensky questioned whether much will come from the meeting, but he says he felt bound to make an attempt if it meant a chance at peace. The Russian army has offered to let civilians in Kiev leave the capital by a single highway. That raised fears that it is planning a full-scale assault on the city. And the Biden administration has banned U.S. nationals and companies from doing business with Russia's central bank. Similar bans were placed on the Russian National Wealth Fund and the Ministry of Finance. The moves effectively immobilize any Russian central bank asset held in the U.S. And the European Union has agreed to send $500 million in military aid to Ukraine for lethal weapons. It's the first time the bloc has supplied arms to a country at war. The package may include supplying fighter jets to the Ukrainian Air Force. And BP has moved to sell its shares in Russian oil giant Rosneft. It may take a financial hit of up to $25 billion by joining the campaign to isolate Russia's economy. BP has been in Russia for 3 decades, and just weeks ago it was staunchly defending its presence there. Canada's TD Bank is expanding in the U.S. Southeast. It's agreed to buy First Horizon in a deal valued at $13.4 billion. The price represents a 37% premium to First Horizon's close back on Friday. First Horizon operates 412 branches in 12 states. TD Bank says it has a large presence in Tennessee and Louisiana. Global News 24 hours a day. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Like, just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Tuesday night, March 1st.
We are ready to respond decisively.
Bloomberg brings you live coverage of the State of the Union address.
America is back to work.
Hosted by Joe Matthew.
Inflation is kind of the #1 talking point so far.
Reaction, analysis, and what it means for Wall Street.
He did leave this door open.
Those are the words Democrats wanted to hear.
Biden may get a little bit of a lift on this.
The State of the Union address, followed by the Republican response. Coverage begins Tuesday night at 8:30 Eastern.
It was very clear from the West, energy was off limits. But what happened yesterday is a clear escalation in potential sanctions, and the fact that energy now is being an industry that is being reconsidered as being off limits.
Cannot overstate the importance of the shift over the weekend. Jeff Curry there of Goldman Sachs. I can tell you that we've had understatement of the year, though, from Russia's central bank governor. The financial system is facing a, quote, non-standard situation, for sure. Futures down by 1.3% on the S&P, the Nasdaq down by 1.2%. The crude market looks like this, 95.29 up by 4 percentage points. The call out of Jeff Curry and the team over at Goldman, 115 on Brent. That's their 1 month Brent price forecast, up from 95 previously. The number on the screen right now is WTI at 95. Brent, Tom, just north of 100.
Yeah, 104 down to 100 as well. The market's churning here. I do want to state that we did see the bids move off the comments from the Bank of Russia, and we get a little bit of recovery here, but we don't want to overstate that. When I woke up this morning early and I did not know what I would see, I really underestimated, John Farrell, what you and Lisa have led on this morning, which is, I guess I'm going to call them non-sanctioned sanctions. That would be a good thing, John, to start with Oliver Wyman's Daniel Tannenbaum.
I think we can call them self-sanctions. Dan Tannenbaum,
I like that.
The head of America's anti-financial crime, Oliver Wyman. Not my term, Dan, but let's work through it. We've had the sanctions, and Dan, what we're all trying to work out is how it works in practice. How many companies, even if they don't have to abide by these sanctions, choose to pull back anyway?
No, thanks, John. And obviously, if you see oil companies walk out of the market, I think that's a pretty good indication that you're going to see other businesses, and I do like that self-sanctions point, going to begin to walk out. I'm hearing from clients of other businesses beginning to draw up, which they had actually started looking at in December, those exit plans of, do we really want to remain in this market? Is it viable for our business? Especially, you have to remember, Russia hasn't really responded with their version of whatever sanctions may be. So if you're a non-Russian business operating in the market, depending on the positions you take, this might be an untenable position. Look to see more companies announce their exits from Russia in the coming days, that's for certain.
Dan, that's what they're choosing to do. What are you suggesting they should do? What's the advice you're giving them?
I think, look, the advice I'm giving right now, there's still a lot that's on the table. This is a squeeze on the Russian economy, that's for certain. And I said it on this show on Friday, and sadly, it keeps coming true. Russia is well on its way to being treated like Iran, like Cuba, in terms of being a truly isolated economy from humanity. So I think as I look to what businesses need to do, it's actually getting simpler the more significant the sanctions get, because there's less of a needle to thread and more just an exit, that the business is too untenable to take on the risk more broadly.
So going a little further, Dan, is the risk for a lot of these companies that the U.S. will remove the carve-out for oil companies, that the EU will do the same? Or is it just that it will be too complicated financially in order to execute some of these transactions with all of the numbers of sanctioned players, and it doesn't even make financial sense at this point to keep going?
So I think that is the question to watch. And as you look at some of the sanctions, and the Treasury Department just put out the U.S. central bank sanctions, I think as I was walking on here about 10 minutes ago, we've still not seen what banks are being de-swifted. And it was very clearly stated over the weekend that only some banks are going to be taken off SWIFT. That's largely to facilitate that continued legal transactions. I think energy, there was talk that the central bank is the nuclear option. Energy restrictions are the nuclear option with respect to Russia. And I would be surprised if you didn't see programs start leaking out that begin to shrink the amount of Russian energy that's allowed to be traded. You can't ban it. You have certain countries that are 100% reliant on Russian oil, Russian LNG.
There's a whole set of statistics that say this is a frontier economy, an EM economy, and yet every statistic says it's the 11th largest economy in the world. What is the power of Saudi Arabia right now to make Russia the 15th largest economy in the world?
I mean, Russia may fall out of the G20 by the numbers this week at the rate things are going. I think Russia's position and how its allies, or what few allies remain, kind of holding their line is a really important point to see. I mean, this economy is in crisis. I mean, you're seeing it's essentially being cut off from most of the West through these sanctions that have been imposed, which does create a broader opportunity for some other nations to kind of increase their standing potentially.
Well, that's exactly where I wanted to go. Who can be? I don't see how someone's advantaged by this war and by the economics and capitalism of this war. You're suggesting someone could be advantaged?
I think possibly. I mean, frankly, this is the global response to this situation, with a few exceptions. We didn't see this much of a rallying around the flag globally with respect to COVID that we've seen with how Ukraine is being handled. So I don't think anyone's looking for this necessarily as an opportunity to leapfrog other countries from an economic standpoint. I think right now there seems to be a pretty uniform focus on how to diffuse the situation and get Russia to pull back its troops.
Dan, just getting some headlines from Boris Johnson in the UK, pushing for Russia to be excluded fully from SWIFT. Dan, do you get the feeling this isn't over?
So the SWIFT comment, and this has been constantly used as some sort of silver bullet. If you take everyone off of SWIFT, any Western businesses still performing any legal trade, including energy trade, would have a very difficult time facilitating getting paid. So I really do think the complete SWIFT ban is an overblown comment that's been made by a lot of politicians around the world. It's definitely not over. There's more companies that can be restricted. There's more sanctions that can be levied. You can drip out oligarch sanctions. And even over the weekend, it was announced the U.S. will begin potentially seizing physical assets. And who doesn't love to see a yacht seizure coming up?
That could be what we see. Dan Tannenbaum of Oliver Wyman, thank you. So we're hearing from the spokesperson for the Prime Minister in the UK, Boris Johnson, right now. Some of the headlines, Tom, that Boris Johnson is pushing for Russia to be excluded fully from SWIFT is one. Boris Johnson telling the Cabinet that more Russia sanctions to come shortly. And Tom, the sports and culture effort, is that TV, the TV channels that have been banned in the EU, sport to get Russia banned from FIFA and the World Cup. There's been an effort over the weekend as well.
Yeah, to me, it's a remarkable set of headlines, John, and I would go to one buried in it all. The Prime Minister of the United Kingdom will, quote, go to Poland and Estonia on Tuesday. I mean, this is a remarkable Boris Johnson.
After speaking to the Polish president and G7 leaders later today, a headline that will be of importance domestically in the UK. The Prime Minister has been criticised, Tom, for using such strong words, but not allowing many Ukrainians to come into the country. At least that's been the accusation. The headline here that jumps out to me, the UK estimates that 100,000 Ukrainians are able to enter for family reunions. Whether that push gets a little bit more broader in the coming days and weeks will be interesting, Tom.
I'll let you translate that as we move forward. John, Brent crude, $101 a barrel.
Futures down 1.3% on the S&P, 1 hour and 5 minutes away from the opening bell. Big moves on dollar ruble throughout the whole day so far. A move of 27% on dollar ruble at the moment, 106.76 from New York on TV, on radio. This is Bloomberg.
know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
One hour away from the opening bell in New York, with futures down 1.2% on the S&P. On the Nasdaq, we're down by 1.17. Into the commodity market, yields are lower by 5 basis points, 190.96. Crude up by more than 4% at 95.59. The talks started earlier this morning between the Ukrainian defense minister and Russian officials on the border with Belarus. Still haven't had any headlines from that. Whatsoever. So we're waiting for some headlines from that. In the meantime, we've heard from the central bank. We've seen the move too from the Central Bank of Russia, a move of 20%. 20% is the rate now, from 9.5%, and a move of more than 25, 26, 27% on dollar ruble. Right now, 107. Some economic data to talk about as well. Let's get to Mike McKee for more on that. Hey, Mike.
Good morning, John. Well, we're not watching the economic data so much at this point as watching the Treasury Department and the Federal Reserve in terms of what they're doing with the Russians. The Russians at this point are being banned from any Russian central bank being banned from any kind of transactions with U.S. persons, and the EU is banning them from the euro. Not just the central bank, but the finance ministry. And what that means basically is Russia is cut off from the rest of the world and has to live on rubles, which is going to be very difficult.
What does the central bank do with their banking facilities, plural, to assist in liquidity? Do we expect the Fed to step in and not so much inflammatory, does it adjust the balance sheet, but just do they have the tools available to step in if they have to?
Well, they do. I mean, they can provide all the liquidity that the banks need. This was an issue brought up by Zoltan Poznar of Credit Suisse over the weekend, because Russians are involved in a lot of financial transactions that they're on one side of the trade. And if they cannot make good, and they can't because they can't access euros, dollars, yen, pounds, then there are probably some defaults coming. And that is what Poznar thinks we could see the Fed and ECB responding to. We are seeing some pressures in dollar funding markets. You look at the forward rate agreements versus OIS, and it has spiked today.
We call that LIBOR, don't we? Or do we not say LIBOR anymore?
We don't say, that's shh.
My fault. John, to me, these are really serious things. I mean, they were brought up by the gentleman from Credit Suisse this weekend. But to me, John, it goes back to Javier Blas. And, you know, it can be a margin call for an individual, an institution, or a nation as well, John.
I think institutions pulling back are the big issue right now, Tom. And that's been a theme for us for the whole of this morning. The difference between how something works in theory and how it ultimately works in practice, and what happens when you disrupt capital flows. You end up disrupting commodity flows as well, even if that's not the intention, Tom. How does a carve-out actually work in the real world?
On a unique original Monday with the horrific war in Ukraine, does the economic data you're expert at, Mike McKee, does it matter this week?
You know, it's a very busy week with lots of data, and if absent this in a normal time, people would be paying a lot more attention. But it's probably only the jobs data that's going to matter on Friday in the longer run. What'll matter the most is Fed Chairman Jay Powell going before Congress on Wednesday and Thursday. The so-called Humphrey Hawkins testimony, that's going to get a lot of attention as the world wants to know what the Fed is going to do. The Fed and the Bank of England are the ones that may be moving interest rates this next month. The ECB is still likely on hold, but how much and what do they say about the future given the uncertainties that we have right now?
Michael McKee, thank you so much, and just thank you again for the political perspective as well. Daniel Yergin is known for oil. We have lots of questions on oil. He has a title, Vice Chairman at IHS Markit. He also writes books, including my book of the year a few years ago, The New Map. We are thrilled that Daniel Yergin could join us today as we consider the crushing, commanding heights of the United States and a new Europe and the collapse of the Russian Federation in some form. Dan Yergin, thank you so much for joining us today. In your commanding heights, you magisterially talk about the shift of Russia in the 90s. You say the marriage of the hedgehog and onto the new Gorbachev era. Are we seeing a shift now with Putin? Is there an outcome that you can see?
Absolutely. What we're seeing, that process that began in the 1990s of Russia connecting with the world economy and being integrated with the world economy is very rapidly going in reverse now as these crushing sanctions are being imposed. Russia is being disconnected from the world economy.
What does the new map for Vladimir Putin look like?
He grossly miscalculated. I think he obviously thought this would be quick. I think he also overestimated Europe's dependence on Russian energy and that would be his high card. Turned out that, among other things, with the extraordinary growth in U.S. LNG, which was nowhere in 2016, and this year will be the largest LNG exporter in the world, has offset Russian gas in Europe. And it may be tough, depending what happens, but that it's manageable. And so he doesn't have that high card, those high cards.
Dan, let's talk about the word manageable. And I'll take it to one extreme, and you can maybe rein me back in. Are we really thinking about a Europe without Russian energy in our future?
No, I don't think that happens for a long time. And sometimes people overestimate. Russian gas was 29% of Europe's gas last year. Big number, but that means that about 70% came from other sources. So, but I think it will, when this crisis is over, whatever form the end takes, Russia will be a supplier, but will be changed is no longer will it be seen as Russia is a reliable supplier, which they've been saying for 50 years. And we heard it from the Germans. They're going to build LNG receiving terminals so that they can have the diversity and depend also on the world market and not be held so much rigidly to Russian gas. And Nord Stream 2 is going to, that pipeline is going to lie in suspended animation beneath the Baltic Sea.
Dan, you mentioned the Germans. The legacy of Chancellor Merkel, the history books don't look kind right now as we look back on her. And I just wonder what happens with nuclear from here, Dan. And if you can, take a moment, because we have the time with you. Just take a moment to walk through what a monster change we've just seen from a German chancellor in just a couple of days.
Well, I think that Chancellor Merkel, it was a different circumstance. She had no illusions about Putin. I mean, she could speak Russian, and I mean, from the beginning, when he's knowing that she had a fear of dogs, brought his big dog into the room. So, and I remember being in St. Petersburg when the two of them were on the stage together. The ice was palpable to the audience. but the circumstances were different, and Putin at that point appeared to be a more rational, if tough, actor. But I think now with the new chancellor, the statements, I think if she were in power, she probably would have said the same thing. But it is a dramatic reversal. And Putin, one of his major games was to break NATO, to weaken NATO. He's done just the opposite. He's brought it together, and Germany is going to go to 2% of GDP for defense spending.
We talk about the consequences for Russia as they get locked out of the financial system, but can you game out the financial consequences for Germany, for the United States, for the rest of Europe, as we do get some sort of uncertainty, not only about the carve-outs for the energy sector in all of these sanctions, but just how feasible the payment for any of this will be?
Well, I think that's the payment system. Even, it's been said initially that the goal was to carve out energy so it would not hit Europe. But risk officers are going to be very cautious. They're going to over-comply. You already see that people are not doing letters of credit. Tanker owners are going to think twice before sending their tankers. So the energy trade is going to be disrupted. This is not going to be a smooth thing. How bad it gets depends on how the war goes, what the Russians do, and so forth. But I think you're going to see, in effect, a sanction on Russian energy just by the behavior of market actors. And everybody today, I know, is calling their lawyers saying, can you understand what the sanctions are? We don't want to make a mistake here. We don't want to get a $6 billion fine a year from now.
Meanwhile, we are getting news about a possible oil release, a crude release from strategic petroleum reserves of a number of major oil-consuming nations, including the U.S., somewhere of 70 million barrels. Do you think this will move the dial at all?
I think it will. I think that if you add up, U.S. production is going to increase 1 million barrels a day. There could be more oil out of the Gulf. If their sanctions are taken off Iran, you get 1 million barrels a day. And I think it was inevitable that they would use strategic stocks. After all, this is what strategic stocks were built for. And so I know the administration certainly wants to go in that direction. It'll be interesting to see what the Chinese do this time.
Dan Jurgen, as I mentioned, you're wonderful. The New Map was my book of the year a few years ago.
Not that long ago, Tom. It was only a year and a half ago.
A year and a half ago. I can't remember. The brain freezes. Farrell keeps me up to speed. It's the only reason I keep going. Dan Jurgen, I'm reading Putin's World by Angela Stent, and in February, I've made it my book of the year because of this war. And what is so important, Dan, and this folds right into Commanding Heights, is 2008, when NATO in Bucharest said, we're going to push east. And Robert Gates and Condoleezza Rice said, no, 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 and they were overruled. Yank this forward to now with what you perceive NATO will do, given the oil economy, given our new capitalism, and given America's true commanding heights. What do you expect NATO to do in 2023?
Well, first, let me say I'm very pleased to see that that's your book of the year, since I'm related to Angela. So I'll pass that on. But I think that in terms of what NATO does, I think it's a strengthening of it. I think it's particularly the change in Germany is the one that's going to be most notable. It's going to be a much more coordinated, and it isn't, it was kind of fraying at the edges. It isn't anymore. And you may see Sweden being interested. You may see Finland being interested in joining NATO. So it's completely achieved just the opposite of what Vladimir Putin wanted.
Dan Jurgen, fantastic to catch up with you, sir, as always, on geopolitics, on this crude market of IHS market. On a lighter note, Lisa, doesn't Tom have about 5 books of the year every year?
No,
every month.
Every single month there's a book of the year.
I have a book of the summer, which is usually 2 shorter books, and I do a book of the year. John, it's February, and I have a book of the year. That's ridiculous.
Already? Does that mean
that's
you have
how ridiculous
4 more
this
books
year
of the
is.
year?
Every month.
John, you nailed it on Merkel. You absolutely nailed it. And from Dan Jurgen's Commanding Heights and Konrad Adenauer and the rest of it of early Germany out to what you've lived in London for, and in Europe for, let's call it 20 years, to what happened this weekend. Yeah, Richard Baldwin, the great economist, had a quote from Lenin where decades can happen in days. John, that's what's happened in the last 10 days.
Without a doubt, Tom, and to sit on that moment for a little bit more, this is a country whose foreign policy has been shaped by, or arguably been crippled by, war guilt for a long, long time. And that was a monster shift we saw from the German government over the weekend. And these are the kind of unintended consequences that Vladimir Putin, the Russian president, is seeing play out, Tom.
And Lisa, to what you mentioned, I can't remember, honestly, Lisa, if it was on air or off air. We're waiting on Exxon and other American corporations.
How do they justify making purchases and being connected to Russian oil and gas if, as Dan Tannenbaum was saying, they're risking some $6 billion fine? Inadvertently, we don't have clarity even of which banks are getting the sanction or getting removed from the SWIFT transaction system. How this plays out is still being gamed out, and we don't have necessarily the full market reaction, depending on how it works out. Time.
So let me get some questions from you guys that you'd like to ask Pierre Underrand. Tom, a fantastic guest, hedge fund manager, coming up in the next hour on Bloomberg TV. Gains of 154% in 2020, of 36% last year. What does the energy call look like in 22?
Well, I'm going to go to Julian Robertson and say, what is the macro call? Not so much a George Soros kind of leverage call, but just how do you make a macro call, John, in this moment within war?
I think you can say, Tom, as an assumption that people are getting behind right now, you lift up the outlook for inflation and bring down the outlook for growth. Yeah. That seems to be the base case, Lisa. It seems to be the consensus view that's forming in the early part of this week.
My question, at what price does oil become self-limiting in terms of how high those levels can get?
The Jeff Curry question.
Yes.
Coming right up in the next hour. Looking forward to it. Guys, good to be with you all from New York City. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Scenario close to stagflation is not I mean it's not out of the possibilities that we can face, so we need again to adjust our policies to that.
The gentleman from the Bank of Portugal, Mario Centeno, there today, talking about one of the phrases of the day, stagflation. Very quickly, Lisa, I would suggest it's more the inflation part where I see the 10-year real yield really come down substantially, negative 0.70. That's a big move on inflation gloom.
And the uncertainty around the Federal Reserve and how they respond. I do want to just say this, this headline coming out that the U.S. and allies are considering an oil reserve release of about 60 million barrels in line with what the Dow Jones was reporting earlier this morning.
Working off our conversation with Daniel Yergin, Ian Bremer at Eurasia Group publishes a lengthy note. And what's so important here, Bremer, the Europeans were stunned, is up top of the note. And I think that so much explains what we witnessed this weekend and into this absolutely unique Monday. We await headlines out of Ukraine and Russia. Futures negative 70, the VIX 32.55. Right now, and very importantly, with JP Morgan Global High Yield and Leverage Finance Conference, Kevin Foley joins our Ed Hammond. This is an important conversation with someone with the dynamics of the debt market. Ed?
Tom, thank you so much. Kevin, wonderful to be here with you. Look, obviously, the buzz all around us testifies to the fact that debt capital markets are extremely strong at the moment. But we can't ignore the events unfolding in the world around us and obviously the fear that that's generating, whether it's just the prospect of a war, whether it's what it's doing to the oil prices. And I wonder how much that's driving the conversation here at the conference.
Well, first, good morning, and thank you for joining us, Ed. You know, I think first and foremost for everyone here that they're concerned about the health and well-being of everyone impacted by this conflict. So everyone is hoping that it comes to a peaceful, quick conclusion. But as you look at the ramifications on the markets, it is about energy, right? It is about, is this going to put upward pressure on energy prices? What is that in turn going to feed the inflationary pressures that we've seen? The pressure for the central banks to try to curb inflation, how is that all going to be played out? There's been an expectation that they're going to be raising rates here for the foreseeable future. Does this force something faster, more severe? We'll see. I think that's what most of the focus is going to be, and how that's going to impact growth going forward. I think the other part, though, is there is an element of people are comfortable because when you look at the consumer, it is healthy going into this. There's $2.6 trillion of excess saving over the past few years. You look at all the financings that have happened over the past couple of years, corporate balance sheets are very sound going into this. So you've got a sound footing in the economy going into a crisis.
But how does anyone get deals done in a market like this, where you wake up, there's so many headlines, things are moving so fast, and there's so much volatility? It must put enormous pressure on sort of the ability to actually go out and execute any kind of deal.
It definitely takes navigating, right? It definitely tricky. It's a market that's going to be headline driven, but deals are getting done. We were pricing deals last week, but you've got to be checking the weather each day and looking what the dashboard looks like. Decide if this is a day you want to go. But again, cash is out there. It is getting deployed. It's getting to work. It's just a matter of, are you going to be more price sensitive? And are you willing to take a little bit of volatility in that pricing and more variability than you would see in better conditions?
And just looking at something you mentioned, obviously, the price of energy and what that means, is that something that people are able to look through at the moment and think, you know, they're going to get their financing needs done and move into the end of the year? Or is this something where people are saying, look, we're going to take a pause, we're going to wait, see how it all plays out, and then if we have capital needs, we'll go into the market?
You get a little bit of everything, right? There is a wait-and-see mode. There is an element of, if you do not need to be in the markets right now, you may pause and sort of say, let's see how it goes. There's others who will take the view that here, rates are going higher. it's only going to get choppier. I'm only going to see my cost of capital go up, so I might as well get this done today. So we've seen it all around. We'll look at this. I think we continue to advise clients that there's always the unknown, and you're better off taking the risk off the table and getting something done, because regardless, you're looking at inflationary pressure, central banks have made it clear where rates are going, you're better off locking in something right now.
When we did this event last year, there were some obvious sectors that had pretty dire financing needs. I think in the travel sector, leisure sector, I think we had a couple of cruise companies come and speak to us around then. As we move back into an economy that is more open and those companies presumably do better, where is the demand coming from? Which sectors are you seeing?
So I'd say where we're seeing most of the demand, and it's been about 40 to 50% of the issuance year to date, has been technology and healthcare. That was a driver last year as well in the back half of the year. Because we're getting more driven by M&A issuance, it is more related to those sectors because of the growth in those sectors. You've seen the travel and leisure stuff. The issuance there has slowed down. They have fortified their balance sheets. Now it's about executing and hoping to turn the corner on COVID.
Take me into the M&A position there, because you have a very good view into the pipeline of what's coming. Presumably there's going to be a pause now for all of the things we've discussed. But generally, how does the deal market look going through the rest of 22?
Well, I'll tell you, we signed up a deal last night. We're continuing to sign up deals. Yeah, it may cause a little bit of a slowdown in decision-making because you also have an impact on valuations where deals are going to transact. But it is all still functioning. We've been busy. I would say the start of the year was probably a little quieter than we expected, probably related more to Omicron. We're expecting we started to see a pickup here. We'll see how this plays out, but deals are still getting done. We're still committing capital, and we still feel confident about doing that.
Kevin, great conversation. We hope to be back again with you next year. Kevin Foley there of JP Morgan. And Tom, with that, I'm going to turn it back to you.
And Hammond, thank you so much. The headlines continue to come out, and of course, there's many more to come as well. And this in Aberdeen, I'm sorry, I'm still not used to ABRDN. Aberdeen, the financial shop of the United Kingdom, has been left unable to sell 5 million sterling stake in Rosneft. That, according to Sky TV. That's exactly what you've been talking about, Lisa, is lots of itty-bitty realities around war.
Yeah, how do you even liquidate assets? How do you even move at a time when credit default traders are actually pricing in a 56% chance that Russia will default in the very near term? How do you sell their government bonds? How do you even begin to value them if we don't have a sense of how long these sanctions are going to last and what the international trade is going to be like, Tom?
I'm going to call it 4 p.m. in Kyiv, and it'll be a difficult and, believe, heart-wrenching night within Ukraine. We're not hearing from the talks yet. And Lisa, there's a headline, U.S. issues do not travel advisory for Russia. That from the State Department. No surprise there.
Well, and how do U.S. nationals and European nationals get out of Russia, given the no-fly zones that you have everywhere, and the idea that things are kind of clamping down and getting that much more insular?
Well, we will see. We're going to drive forward the conversation on radio and television for you this morning. We do that with markets very much range-bound. There have been some nuances through the morning.
Yeah.
Without question, Bank of Russia speaking did move ruble, but it's come back a 108 on ruble, slightly elevated over where it was a number of hours ago, a weaker Russian ruble. On oil, Brent crude, $101 a barrel. We move the conversation forward with Max Baucus in the 12 noon hour. This is Bloomberg.
three SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
From New York City for our audience worldwide, good morning, good morning. Following a massive weekend, futures down 1.4% on the S&P. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue. A lot has changed. Ukraine officials arriving at the Belarus border for a high-stakes meeting with Russian counterparts. President Zelensky still skeptical, saying, I don't believe that much in the result of this meeting, but let them try. So not a single citizen of Ukraine has any doubt left that I used every chance to stop the war. Talks coming following Western allies sanctioning Moscow's central bank and cutting off various lenders from the critical SWIFT messaging system. Jen Psaki suggesting the U.S. could go further.
We want to take every step to maximize the impact and the consequences on President Putin while minimizing the impact on the American people and the global community. And so energy sanctions are certainly on the table. We have not taken those off, but we also want to do that and make sure we're minimizing the impact on the global marketplace.
President Putin responding, saying, quote, I'm ordering the defense minister and chief of general staff to switch the Russian army's deterrent forces onto a high alert mode of combat, standby duty. Team coverage starts right now with AMH from the White House and Bloomberg's Maria Tadeo in Geneva. A fast-moving weekend, AMH, and some news this morning too.
Yeah, that's right. Russia remains even more isolated this morning, Jonathan, off the heels of what Governor Elvira Nabiullina said over in Russia, that today the financial industry is just not working as it should be. I think you called an understatement of the year. What we're hearing from the U.S. administration is more details about the sanctions that came this weekend. Right now, they are banning any U.S. investor, any business from dealing with the Central Bank of Russia, their National Wealth Fund, and the Finance Ministry. This is what Treasury Secretary Janet Yellen said in a statement. The unprecedented action we are taking today will significantly limit Russia's ability to use assets to finance its destabilizing activities and target the funds Putin and his inner circle depend on to enable his invasion of Ukraine. Jonathan, the U.S. administration, when they talk about those funds, they're talking about that $630 billion reserves war chest that President Putin has built up over the years.
Maria, let's do two things. Let's start with the effort at the border with Belarus right now, the negotiations that are ongoing, and let's talk about the effort where you are.
Yeah, Jonathan, and you talked about the isolation of Russia. Well, let me give you a very real life scenario that is happening here. Today in Geneva, there is a United Nations Council. The Russian Foreign Minister, Sergei Lavrov, was supposed to participate, and that is the reason, in fact, why we're here. Now we're finding out from the Russian delegation that Mr. Lavrov is not going to be attending this meeting. There's a number of reasons for this. One, of course, is that we're seeing a diplomatic isolation of Russia in many ways from the West as a form of protest to the attack that we've seen in Ukraine. The other one, of course, is the practicalities of the sanctions that have been approved already. As you know, the airspace in the European Union is shut to Russian planes and Russian registered flights. It's also worth noting that Mr. Lavrov himself is now personally sanctioned by the United States and the European Union. So this is the real life impact that these sanctions are having all the way to the Russian political elite. Now, when it comes to the talks happening on the Belarus border between the Ukrainian delegation and the Russian delegation, look, both sides said we want to talk and there's no preconditions going here. But the Ukrainians have made it clear if Russia wants a total capitulation, they're not going to get this. And by the way, we need to see a ceasefire and Russians pulling back their troops. So again, these are very difficult talks, but you need to factor that for the Ukrainians, they really do feel the tide is turning and they're not just going to agree or concede to anything that the Russians put on the table.
Crude up this morning by 3%, Brent at 101. Anne-Marie, WTI at 95.70. We're off session highs because there's some talk this morning of a repeat of last year, a reserve release. What are you hearing?
Yeah, potentially we could get a strategic petroleum reserve tap from the United States, but also, Jonathan, they would likely repeat what they did last year, which is making sure they can coalesce other consuming countries which are struggling to also dig into their reserves. So they would do this coordinated release to make sure they could try to at least at some measure tamp down the pressure on the oil market, because we all know domestically this is a very important and significant issue for the president, especially as the Democratic Party gears up to try to maintain some seats ahead of the midterm elections. Jonathan, we should also note what is happening right now with the sanctions. The United States is trying to have a carve out on some of these banks for energy trades. The issue is, what I'm hearing from talking to a number of people in the industry is they might self-sanction.
Yeah.
Why would a bank want to go do business? It's going to be very difficult. And not only that, the natural gas market might be a little bit different, but try to find, is what I'm being told, try to find a ship or a tank to want to go pick up Russian crude right now. The freight rates are incredibly high, and this is all adding to that price premium you're seeing in the oil market.
The theory meets reality, and that's the reality at the moment. AMH down in DC. Anne-Marie, stay close. We'll catch up with you through the hours. Maria Tadeo of Bloomberg out of Geneva this morning. Thank you. Dollar ruble, a move of 32%, 110 right now on dollar ruble. Understatement of the year comes from the Russian central bank governor, who said this morning, quote, the financial system is facing what she calls a non-standard situation. To talk about that non-standard situation, joining us now is SocGen Subhadra Japa, John Hancock's Matt Miskin, and Ashok Bhatia of Neuberger Berman. I want to come to you, Subhadra, first, and ask you whether your base case now is a Russian sovereign default.
I think it's really hard to know, but you're going to see this isolation only build up, and this is not a situation that's going to resolve itself anytime soon. So really what you're seeing in the markets, broadly speaking, is exactly what you would expect, which is sort of a readjustment, if you will, from Thursday to Friday, where we saw a little bit more optimism, to something that's going to be much more drawn out. So, you know, definitely that's a possibility. Things seem to be heading towards a more dire situation in Russia, for Russia. But broadly speaking, I think the market is going to take it in stride, because there's really not that much of a, you know, bigger impact for, you know, the U.S. economy. I think the impact is going to be much more on Europe, but even there, broadly speaking, I think the impact is going to be muted. You're seeing a near-term flight to quality into treasuries, as well as the sell-off in equities. But we'll have to see. This is not a one-day resolution. It's going to be over the next several months.
Ashok, there's a range of unintended consequences we could explore. What's your base case now?
So base case is, I think, 3 quick points. You know, first is this is a major event for Russia. Obviously, we've gone from, you know, part of the global economy to effectively being cut off from it and the banking system in 24 to 48 hours. And, you know, questions about Russia default, local debt, currency rates. I mean, this is a sudden stop in the Russian economy. I think, the second, though, is that the recession risk that comes from this for the global economy, it still remains pretty low. Global economy enters this event at, with pretty strong underlying growth, and there are still policy mechanisms. You've been talking about the crude oil release that can mitigate some of these impacts. So low probability of big contagion. And then third is we think there will be a central bank change. We think peak hiking expectations are done. Not that the Fed still won't hike, but we think we're going to gravitate back to something like 4 hikes rather than 6 to 7, ECB on pause. And so that will help provide a little bit of stability. But overall, this is really, focused on Russia, and this is day one of sorting out those implications.
And Matt Miskin, as Ashok points out, it's day one. And when you look at dollar ruble, I caught up with someone out of the City of London this morning who basically said this is not a proper market. And it's not a proper market until foreign holders of Russian assets can actually sell into it. Right now, they can't. We heard from BP over the weekend they want to dump their Rosneft stake. Okay, we've got to work out and see how that plays out in the coming weeks and months, Matt. Have we actually seen the move from the weekend's events? Have we actually seen the move yet this morning?
Still think you need the dust to settle more, and you can't mark to market certain assets right now because they're not even trading. So there's going to be more of a discount likely built in. To us, this is not the time to be unloading assets. You're seeing selling at any price right now. People just want out, and investors just want out. That is not usually a good time. We would be providers of liquidity versus takers of liquidity in this type of a market. But our positioning is we would lean more in the U.S., look for value in the U.S., healthcare, industrials, more broadly in terms of sector exposure, focus more on quality. We'd be concerned with the European banks here. We think there's going to be, more connection there with this conflict. And so you want to be very mindful in terms of risk management, taking European value exposure here in the financial sector.
The hope was that we get an ECB rate hike, and that's what pushed some money into the European lenders through much of this year. Now the pullback is brutal. UniCredit down by 12%. Raiffeisen out of Vienna, Austria, that is down by more than 15 percentage points. Subhadra, I am no expert on the plumbing of the financial system. Zoltan Pozsar of Credit Suisse is. This is what he wrote over the weekend. I think we all reached for that note over the weekend, and this is what he said. Banks' inability to make payments due to their exclusion from SWIFT is the same as Lehman's inability to make payments due to its clearing bank's unwillingness to send payments on its behalf. History does not repeat itself, but it rhymes. Does this rhyme with anything dreadful that's taken place in markets, Subhadra, over the last 15, 20 years?
I think this is a very unique situation, right? I think in the case of Lehman, it was the company's inability to meet its obligations. Here, Russia has just been cut off from the financial system, so to speak. So this is a very unprecedented, type of action, global action, if you will, but one that's much more impactful on Russia than all the other countries in the world because of the fact that it's going to be, the Fed is going to be able to step in, provide dollars if there is a need for dollars. It's going to be able to perhaps help industries that are most, impacted by direct connections with the Russian economy, and same with other central banks like the ECB. So I think this is a very unique situation, and for the most part, I think the exposure for the U.S. The Russians don't hold a lot of treasury debt. It's mostly all in dollars and in the FX market. So the impacts are going to be localized in certain FX markets and not broad brush impact, if you will.
We'll work our way through these issues into the open and bow. Futures right now, well off session lows, down by 1.3%. Sticking with us, Subhadra Japa, Matt Miskin, Ashok Bhatia. Looking at the equities this morning. Let's get you some stocks ahead of the open and bow. Here's Kelly Lyons.
Well, John, we have to start with one in particular that you mentioned, and that is BP. Those ADRs moving lower by about 7% in pre-market trading. The company weighing reputational risks about keeping that relationship with Russia's Rosneft oil and deciding it is better to just offload that stake. So that stock is down. The question really is, does this mean selling it? Can they find a buyer? And if it just means walking away, does that mean a $25 billion write-down for the company? Also moving lower to a way larger extent is Yandex. This is a Russian internet giant that is listed here in the States. It's already down 65% over the last 6 days. It's lower by more than 20% this morning. So that is a seventh day of really heavy losses. You have the banks feeling the heat this morning as we're seeing that bid for haven in the Treasury market. Yields coming lower. That's taking down the likes of JP Morgan and Citigroup. And you're also seeing some leasing companies companies moving lower as well. AirCap, one of them, because of the sanctions as they relate to airplanes and Russia, that could be a huge threat to that company in particular that has about $2.5 billion worth of assets in Russia and Ukraine. So that stock also taking a leg lower in early hours. John.
Katie, thank you. One big focus for us through this morning, self-imposed restrictions. This from Reuters and BP. BP cancelling fuel oil loadings from the Russian Black Sea port. That again from Reuters. BP cancelling fuel oil loadings from the Russian Black Sea port. More on that a little bit later this morning. Coming up, investors placing their bets on the Fed's path to tighten amid escalating geopolitical tensions.
At the end of the year, I suspect we'll end up with 4, maybe 5 hikes at most, and inflation will still be running hot. Inflation expectations will be an issue.
That's next. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Earnings season continues.
To the metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's a tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
Minutes away from the opening hour, just getting some breaking news from the finance minister. Ukraine to auction the first war bonds on March 1st. That headline just crossing: Ukraine to auction the first war bonds on March 1st. What does all of this mean for the Federal Reserve? This is the take from Federated. Here's the quote. This conflict implies a further deterioration of the already tricky growth inflation trade-off central banks have been facing. It is fair to say that the crisis increases the room for central banks' policy mistakes. With more, here's Mike McKee. Morning, Mike.
Good morning, John. Well, we just don't know what the scope is or how wide the error band is for the central banks of the world. But you take a look at what's happened the last couple of days, and markets have started to price out more aggressive tightening. You can see the Bank of England and the Fed are still expected to be raising rates, but not as far as they were, say, a week ago or so. And you can see that at this point, the European Central Bank isn't expected to do anything. That kind of pushes against the idea that by the end of the year, they would be raising rates. It's all going to depend on what happens. And again, too early to tell. The one thing the Fed may get involved in is something you were talking about a little earlier, and that was Zoltan Polzer's comment over the weekend, that he thinks that the Russians, after they sold treasuries, put all that money into Forex swaps, and as they are a counterparty now and nobody can they can't sell anything, there is a good possibility of defaults. And you can see the forward rate agreements and DYS chart there, that's a measure of bank instability, and it spiked today. There is concern about a demand for dollars, a shortage of dollars out there, and the Fed may be forced, according to Posar, to make some available, to increase liquidity, which might raise the size of its balance sheet at a time when they're trying to shrink it. Now, there is data this week that isn't going to make a whole lot of difference given the larger context of the world. We get ISM manufacturing tomorrow. The big news is going to be Jay Powell speaking on Wednesday and Thursday, the testimony known as Humphrey Hawkins. He will give us the latest thinking at the Fed over what this is going to mean for the U.S. economy, and a lot of that's going to depend on what it means for economies in Europe. And then on Friday, of course, Jobs Day, but that's going to be really overshadowed by the war at this point.
Not even talking about it at the moment, are we, Mike? Thank you. 400K, the estimate this Friday. Here's the take from Citi. For them, not much has changed. The quote as follows: despite elevated uncertainty, we have not changed our base case outlook for 100 basis points worth of rate hikes by the June FOMC meeting. We do not see geopolitical developments as they stand now as taking the possibility of a 50 basis point rate hike in March entirely off the table. Ashok Bhatia, I want to come straight to you. You mentioned this briefly. You do think it changes things?
Yeah, we think 50 basis points is off the table. I mean, that was unlikely to begin with, and think it's off the table now. And the reason is, the last few months, the markets and the Fed have been, able to 100% focus on the inflation risks. And so policy has been driven about the response to elevated inflation, and it's led to, escalating, hike expectations. And now we think this is going to introduce some downside growth risks. We don't think it's significant. We don't think it's going to be material, but the central banks are now going to have to be a little bit more balanced on growth versus inflation. The other element of this is that, the Fed and other central banks have stopped talking about transitory inflation, but it doesn't mean that they still don't, in the back of their minds, think that's a possibility. And this will allow that to kind of re-enter the dialogue a little bit. So net, yeah, the central banks are going to hike. We think this actually reduces the chance of a policy mistake from the Fed and other banks. Hiking cycles can be more elongated rather than accelerated, and that ultimately, is a bit of a positive for markets.
Subhadra, your take?
I think I agree with that. I think, having 7 hikes by the end of the year seems very, very aggressive. We're still on the camp that the Fed will hike rates 5 times and introduce some sort of a balance sheet unwind or runoff, announcement in the middle of the year. That balance sheet runoff could be quite large. You're looking at perhaps $100 billion a month, capped, $1.5 trillion over the next year and a half. And, broadly speaking, I mean, the curve is very, very flat. The 2-cents part of the curve is around 40 basis points. I think an aggressive path of rate hikes is going to flatten out the curve even more. So I think they're going to be very, very mindful of developments, not just on the geopolitical front, but also on what the impact of tighter monetary policy is going to be on growth. And they don't really want to slow down growth. They want to see a prolonged period of expansion. So they'd much rather spread out those hikes over the next few years.
The Goldman team and Jan Hatzius came out this morning and raised their inflation outlook. Matt, what was interesting for me is not just the inflation outlook, they threw in an extra hike for next year as well. So for their 2023 inflation outlook, that's up, 22, that's up, and a slightly higher terminal Fed funds rate at 2.75 to 3. Matt, what's been interesting for me, just going across bank to bank over the last week, is that not many banks have actually changed their call on the Fed, even though this is all played out through Europe.
I don't think it makes a lot of sense. I think you do have to adapt. I think if Powell says he's going to be nimble, and that was the big tagline of this whole thing, and then you have this massive geopolitical shock to the system, and then saying they're not going to be nimble, I think that's, you're not catching, the biggest takeaway here. And I do think they're going to pivot. Oddly enough, the curve is steepening. I mean, I think there's been some really good points here that, we think 4 to 5 rate hikes is about right. We think that the curve is really flat, and that if they did go 50 basis points, you'd likely invert the curve very shortly thereafter. And so the odd twist to this is that the curve's steepening while everything else is looking at this risk-off environment. And I think that's telling you the bond market's saying, hey, if the Fed doesn't aggressively hike here, it means they're not going to make a policy mistake. And it could mean that this cycle is actually elongated because we're having this, pause here in risk assets and volatility, but it could actually mean that they do not make a policy mistake, which would be better overall for the economic cycle.
Ashok, I was just going through the 3 points that you made in the last 30 minutes, that the peak of central bank tightening expectations has perhaps passed. You also said commodities would contribute to elevated inflation for longer in your notes. And the third point, the markets will begin to price increasingly towards negative growth outcomes. Are the first two compatible, Ashok? This idea that we will have more persistent, higher inflation, but expectations for a more hawkish Fed have perhaps passed?
Yeah, because I think the way you reconcile that is that although inflation may remain more elevated for 6 months or 12 months, it allows the central banks to have a bit more uncertainty, and there is a bit more uncertainty about how transitory that is. You know, this does increase the chances. You know, you were talking a little bit about, you know, is Russia going to default on its debt? You know, we've got the bonds are certainly putting a significant probability on that. There's an interest payment coming up in March, mid-March, which we'll have better visibility about.
Yeah.
So these types of things are introducing that growth dynamic, which increases the possibility of slower growth outcomes in 2023 and 24. And I think, you know, we think allows the bank to think about this elevated inflation as perhaps transitory from a little bit more of an intermediate time frame. So it's going to be volatile, and it's going to be a bit of threading the needle from the central banks. But I think those two can be reconciled.
Let's get it messier, that's for sure. Ashok, Matt, Subhadra sticking with us. Up next on the program, your morning calls.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Equities are lower here. Let's get to your morning calls. First up, BMO upgrading Dollar Tree to outperform, highlighting a favourable risk reward with consensus expectations too low. UBS downgrading AbbVie, struggling to see any meaningful upside after the stock's recent outperformance. And finally, Wolf Research upgrading Lockheed Martin, expecting stronger international military spending given the developments in Ukraine. Up next, oil surging on another round of sanctions, adding fresh momentum to the market's top-performing sector this year. That conversation up next.
energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
25 seconds away from the opening bell in New York City this morning. Good morning. Kicking off a brand new trading week with equity futures down by 1.25% on the S&P, on the Nasdaq down by 1 percentage point, on the Russell down a single percentage point this morning. Good morning to you all. The opening bell in New York City rings. Switch up the board and get to the bond market. Yields look like this. They come in down 8 basis points on 10s, at the front end even more so. On 10s right now, 188.36. It's a break to the downside of 190. Euro dollar, dollar strength, the story out there. Euro dollar 112.12, negative 0.5% on that currency pair. Crude, $95 and about 7 cents. We're positive there, 3.8%. 15, 20 seconds in, we're negative 0.7% around the opening bell on the S&P 500. Energy top of the pile, the relative outperformance there, we're negative 0.2%. Every other industry group on my screen at the moment in negative territory. Early days, of course, we're down 1% on the S&P now. Let's get you some single names around the opening bell. Back with us, here's Kaylee.
Well, John, among those big laggards in the equity session are consumer stocks, specifically those that are exposed to Russia. The likes of Anheuser-Busch and McDonald's, for example, they're both moving lower by about 5 and 2% respectively. You also have the banks under some pressure as we see a haven flight into the Treasury market, bringing yields lower. That's not great for the names like Citigroup, which is down about 3.4%. You also have tech getting hit, but relatively less so than the broader market. Nvidia is only down about 0.4% right now. What's interesting is in addition to energy, your outperformers today have been defense stocks, given a boost by Germany boosting in a massive way its defense spending, prodding the idea that maybe countries around the world will follow suit given the crisis in Ukraine. But all of these defense stocks are off of their pre-market highs. Sure, Lockheed Martin, Raytheon, General Dynamics, Northrop Grumman, they are still higher by about 1% or more, but they had been significantly higher in early hours this morning, John. So we're seeing them lose a little bit of steam at that opening bell with stocks broadly down on the day, John.
Very focused on some of these energy names stateside as well. Kaylee, thank you very much for that. Given what happened with BP over the weekend, looking to drop its Rosneft stake, which is worth close to 20% of the company, half of its reserves, a third of its production. Just get your head around that. For BP, that stock is negative just 5.5%. I say just because given the story we're discussing right now, we're down just 5.5% on the BP story. It doesn't sound like a lot. 357 over in London trading. I want to touch base with Anne-Marie down in DC to catch up on this story of the moment. AMH, it's these talks on the border in Belarus. Have we had any indication that they have wrapped up? Have we heard anything about the outcome of them?
No, we're still waiting for that, Jonathan. At this moment, standing at the White House, I have no indication about even the sentiment of those talks. Are they in good faith, and what is potentially the outcome? But we do know that Ukraine has gone into them really wanting a last-ditch effort to avoid this war, not avoid, end this war, because the war is happening and Kiev is completely being encroached. And this is something Ukraine wants to avoid at every moment. What I can tell you from here is that we are waiting for the president to get back from Delaware, where he spent the weekend. He should be arriving this hour. And then at 11:15, Jonathan, he'll be talking to a number of other leaders and allies about this crisis and their updates off of the heels of the fact that we got more information about the sanctions and penalties the U.S. and the West are really slamming on the Russian economy.
I'm going to talk about energy in just a moment, AMH. I'd love your view on a couple of things, and that's climate change. The Polish speaking at the moment, saying that the EU climate policy needs revision. Now, one thing that I've been wondering, Anne-Marie, is whether it accelerates the transition or in some cases, in some countries, reverses the transition as they try to wean themselves off depending on Russia for oil and gas.
It's a great question. When Jen Psaki was asked about it on ABC this week, and she said energy was on the table, something the administration has avoided to say because of how important Russia is to the global energy market, being the second exporter of crude. She said that part of this is also a fact that us and other countries need to realize that we need to lessen our dependence on, especially for Europe, not just fossil fuels from Russia, but also fossil fuels in general. The issue is, Jonathan, is especially in Europe, natural gas was really going to be that fossil fuel that was the link for the energy transition. And this is critical for Germany because over the course of the last decade, they have been shutting down their nuclear sites. So they are ever more attached to that Russian energy. But over the weekend, we had a historic speech from Olaf Scholz. And so much of that was about defense spending. They want to hit that 2% target. This is an absolute reversal. I think one of the most paramount issues coming out of the weekend was that speech. But also, that's not getting a lot of attention, is he talked about energy and how they need to build more LNG storage facilities. That would mean they can have more shipments instead of taking some from the Russian pipelines.
MH, as always, stay close for breaking news. Anne-Marie down in D.C., a headline from Chevron. No current operational impact from Russia's invasion. So for Chevron, they say no current operational impact. That's the headline from them. Here's the quote from Goldman's Jeff Curry this morning. Says the following: commodity markets need to reflect not only these difficulties in paying for Russia's exports, but with little left to sanction, the risk that Russian commodities eventually fall under Western restrictions. So Badr Rajab, Matt Miskin, Ashok Bhatia is still with us. Matt, I'll come to you on that. Is that your base case, that that's where this ends up? Because I've thought about it in theory and practice, it seems like some people will self-impose those kind of restrictions, sanctions on themselves anyway. Do you see it heading in that direction?
It's going to be really hard to do. I know that it's probably the right thing to do in a lot of countries to sanction Russian energy, but they're going to be so dependent on it. What you really need to see is OPEC plus the rest of the oil-producing community step up and bring more barrels to market. We think you see that. You see, the Middle East bring more oil. Their production is still not back above where it was pre-COVID. So we've got to get that back up and running. We need the United States to actually increase its oil production, more rigs, more oil production in the United States. And we need to fill this void. It's gonna really dent the global economy with oil prices this high and the geopolitical risk that is now being priced in across markets. We need energy back. And that's something that's going to have to happen without Russia helping much at all.
Well, the team at Goldman are doubtful. They're looking at 115 on Brent, 1 month price target up from 95. This was a line that jumped out for me, Ashok, in the research, and I think this will resonate with you. Barring a breakthrough in peace negotiations, we believe this leaves commodity prices having to rally sharply as we see demand destruction as now the only significant remaining balancing mechanism. Ashok, let me repeat that, and I'll ask you if you agree. That demand destruction is now the only significant remaining balancing mechanism. Do you agree?
Yeah, I think just with a couple of caveats. I mean, there are a few things out there that could also help. There is some discussion that perhaps there's an Iran deal that could bring, a few million barrels onto the market. There's also, the potential for some strategic releases, which, the variety of crude they hold, there's certainly refinery issues there, though. And then third, though, this is a big, chip for a potentially negotiated settlement. The central bank restrictions on the Central Bank of Russia, the U.S. released its, the official documents this morning and are trying to carve out energy producers. In practice, that could end up being a lot harder than I think we think people expect. So that may be something that, if we can get to a negotiated solution, could come off. So, but I think generally that point that demand destruction is going to be a significant issue going forward, and sort of the balancer is accurate.
The quote from Amundi that I think it'll be of interest to you as well, Subhadra. Rising oil is a major source of inflationary risk at a time of already hot global inflation. Then they use the S word, the risk of stagflation globally is now higher. I've heard that word a few times, Subhadra, stagflation. Do you think that's the right word to characterize the environment we're about to go into?
Well, we've heard that from one of the ECB members, right? So definitely there's a preoccupation on what the impact of persistently higher inflation is going to be on growth, and that kind of points towards that sort of scenario, although I think broadly speaking growth in the US is going to be okay this year, anywhere between 3.5% to 4%. Ironically, this whole green transition is going to require more commodities, more oil, more copper, all of the other commodity complex, demand is going to go up because of the green transition. We're just not there yet to be able to fully transition to a green world. So, during that time, during the transition phase, there's going to be quite a lot of demand for a variety of commodities. And if you assume that the Fed's going to be somewhat more cautious on its path of rate hikes and not deliver 7 rate hikes this year, then there's a chance that inflation expectations remain, relatively high. The Fed might err on the side of letting inflation run a little hotter so that they don't really stymie growth. So in that sort of scenario, I think that inflation expectations, the rising inflation expectations, is possible over the near to medium term. The green transition is going to take several years, so I think that the dependency on commodities and oil is going to be here to stay, at least for the next couple of years.
That transition's getting more expensive. Ashok, just to leave the macro stuff to one side and just get to a final question for you. When you work through the portfolios, you speak to people in markets right now, do you get the impression they still have Russian exposure to sell? Does that come up a lot in conversations? Because this morning, that's what it's about for a lot of people. They're looking to the foreign investors that haven't been able to sell today, and I'm trying to work out if this move is really that cathartic move or whether that's still further down the road.
Today is the day, I think, folks and portfolio managers and clients are working through what is their Russian exposure? Are you legally able to sell it? And if so, how do the mechanics of that work? And then the second issue, the last issue is there a bid for this? Certainly, the indications we're getting is that the volumes that are being able to be transacted in the currency are pretty limited. Hard currency bonds, less liquidity. So our best guess is that we're going to enter a period where what people own in Russia is likely kind of remaining on people's books. And there's not going to be a lot of back and forth and trading of these assets for the near term.
Ashok Bhatia, appreciate your time as always, sir. Matt Miskid, Subhadra Japa, thank you. Just hearing from Lufthansa, a spokesperson making comments by telephone saying the following: they do not expect an impact from Russia's flight ban. They go on to say they will continue flying south of Russian airspace to Asia. Will mean a change to get there, a change for China, South Korea, and Japan. They are the comments from Lufthansa this morning. The bottom line, they do not expect an impact from that flight ban. Coming up, oil soaring amid mounting energy concerns.
As of today, there is no disruption in oil supply through Ukraine.
More on that conversation coming up, and a conversation with this man you do not want to miss. Pierre Andorad, the founder and CIO of Andorad Capital Management. That's next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping. But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada. Tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
President Putin's decision to pursue his aggression against Ukraine is a terrible strategic mistake, for which Russia would pay a severe price for years to come. We must stand ready to do more, even if it means we have to pay a price, because we are in this for the long haul.
The West ramping up sanctions on the back of recent escalations. Goldman's Jeff Curry expecting President Putin's latest actions to shift the energy narrative in the US.
It was very clear from the West, energy was off limits. But what happened yesterday is a clear escalation in potential sanctions, and the fact that energy now is being an industry that is being reconsidered as being off limits.
Joining us now is Javier Blas, our brilliant Bloomberg opinion correspondent and columnist. I want to start here, Javier. Even if they want to carve it out, can they carve it out? That's something you've been thinking about over the weekend.
Well, they can carve it out in some ways, and we have seen the U.S. Treasury has issued a general license that allows to continue paying to Russian banks that have been sanctioned and even have been disconnected from SWIFT. The energy payments are authorized, and it includes, it's very wide definition, it includes anything from crude oil to refined products to natural gas to even uranium or timber. So they can continue paying, but there is a huge amount of self-sanctioning by the banks and by the traders. We may see that officially nothing has been blocked, but unofficially corporations, companies are taking a different view.
That's the word I want to pick up on, Javier. Thank you for it. If you're not following Javier Blas on Twitter, you should, because he's going to give you everything you need to know about what's happening with the commodity market. This man will too. Pierre Onderrand, the founder and CIO of Onderrand Capital Management. He joins us now. Pierre, fantastic to catch up with you. Let's just start with an open one. How you expect the sanctions that have been announced to shape the flows of commodities out of Russia into the rest of the world?
I think, as Javier said, there will be some self-sanctioning. So, we can already see the euro is trading at very large discounts, and there's no visibility on how the sanctions will evolve. So even though for now the sanctions are not targeting energy export, that could change over time. So there's some fear from anybody to buy Russian oil at the moment. But I would say that prices are not going to be only dependent on that, but I can answer that later.
No, please do. What do you think they'll be dependent on?
Okay. Well, first, I mean, before the Russian invasion of Ukraine, the market was already very bullish, and I expected to see much higher prices than today. So I think a large part of the rally is not only due to the Russian invasion of Ukraine, and the main fundamentals are that already inventories are very low, there's very little spare capacity, there's very little expected supply growth, and there's like a high expected demand growth due to the recovery of COVID. So already just that, should justify much higher prices than today. Then the Russian invasion, changes, could change potentially a lot of things, but we don't know yet how it's going to pan out. Things could get better like soon as things could, get much worse over the long term. So I don't think oil prices are only going to be dependent on, the amount of Russian oil we lose over the next few months. I think there's a lot to it. There's, if Putin stays in power and carries on the tensions and there's no de-escalation, the sanctions will stay. That will impact Russian production in a big way. That will eventually impact Russian exports as well. And that will also impact an acceleration towards alternative energies, toward the energy transition over time. So there's like a lot of factors at play. It's not only about how much oil production we will lose from Russia today.
Well, decarbonisation was at the epicenter of your thesis. When I look at some of the fund's performance for you, Pierre, I saw one up more than 100% in 2020. In 2021, I think up more than 30%. I'm wondering now, Pierre, and I'd love your view on it, whether this shift to decarbonisation accelerates or reverses because of what we're seeing play out. I hear the likes of the Italians talking up coal again. The Polish looking at maybe doing something as well. I just wonder from your perspective, do you think it accelerates it or reverses it?
No, it has to accelerate because so far we did some work on reducing the supply, but not on reducing the demand. So I think we'll have to do a lot of more work on reducing fossil fuel demand alongside supply. So the supply should actually go down after the demand, obviously, so that we don't have price shock and we don't give more power to countries like Russia.
Russia has the power, seemingly right now, because everybody wants a carve
yes,
out.
But I think they think they have more power than I think they really have. I think there's room, if needed, to put sanctions on Russian oil exports. I mean, Russia is exporting 6.5 million barrels a day, about 2 to 2.5 million barrels a day going to China. So that leaves like 4 million barrels a day going to Europe or the US. If we were to sanction that, I'm sure that 1 million barrels a day of it would go to China, which means that we'll probably lose 3 million barrels a day of supply. This is an amount that the world can afford to lose to some extent. I mean, if we lose that supply, the Gulf countries will probably increase production by 1.5 million barrels a day, and then we'll probably need to reduce, to take some oil from the IEA emergency reserve, so the global SPR, at the rate of 1.5 million barrels a day. And that's without, losing some demand due to higher prices. So
yeah, that's
I
a
think
slightly controversial view. Can I just jump in and pin you down on that?
Sure.
You think that Europe could move on without Russian gas, without Russian crude?
No, Russian oil. Russian oil
specifically.
Russian gas. Russian oil, I don't think is too much of an issue. And, Russia is getting 5 times more revenues from oil than gas. So I don't really see too much of an issue. At the end of the day, there's a lot at stake here, right? We're speaking about potentially World War III starting, and that needs to be stopped as soon as possible. Obviously, there will be cost, but there will be less cost trying to stop it early than trying to stop it late, right? There will be less human cost and economic cost in trying to stop Russia right away and show that we're serious and that we're willing to take a cost. I mean, there's one reason why Putin thinks he has the power and is kind of bullying the world is because he thinks we are not ready to take any economic cost. But I mean, we are speaking about a war on the free world. It's not, it's not a small thing, right? Yeah. I mean, there will be cost to it.
No, I hear you. Goldman Sachs think that the only remaining balancing mechanism left in the commodity market, crude specifically, Pierre, and I'd like your opinion on this, is demand destruction. That ultimately crude prices go higher from here, but that kills demand, and that's how we're going to balance this market. Do you agree with that?
Yeah, I mean, I agreed with that even before the Russian invasion, right? I think we have to take oil. I mean, why now? As I said earlier, we have low spare capacity, we have low level of inventory, we have low supply growth and still high demand growth. So we should bring that demand growth back down. We have to take it as something that a bit more of a luxurious product and not a birthright. You don't want to this oil to actually support autocratic regimes around the world.
I know you've got really strong views on the SPR release as well. Pierre, you've seen the headlines. I've seen the headlines this morning.
Yeah, I mean,
we made this effort at the end of last year. Seemingly, we're doing it again. Do you think it moves the dial at all?
I mean, I think it needs to be done for the right reason. I mean, using SPR to try, to bring prices down is a no-go. Like we're at the beginning of a multi-year deficit. So if you start using the SPR early in the multi-year deficit, is shooting yourself in the foot. You need to keep that for the right reasons. And I think the SPR has always been there to bring more supply when we have large supply disruptions due to geopolitical shocks. And that's probably what we will have over the next few months or years. So the SPR should be kept for those events, not to manipulate prices, but and that the way it was always used in the past is using SPR due to large supply disruptions from a large producing country. And I think it needs to be used for the right reason.
Pierre, as we work through your conviction trades right now within some of the portfolios, the funds, what is the number one? And I know a lot of your views right now coming into the weekend, coming into the last few weeks, you've maintained them. I'm more interested in the views that have changed. Pierre, have any of those views changed?
I think there's more, question mark. I mean, I think on oil, I'm still as bullish or slightly more bullish than before, because if anything, we're going to lose some supply. Eventually, we lose some demand too, but at higher prices. But overall, the price would have gone up in oil. So it makes me more confident about the low probability of a move down, on the way. For gas, I think it keeps it supported. I mean, basically, it's in line with the fundamental views, right? Oil and gas in Europe would be supported over time, and I think that makes it even more supportive.
You know what I've seen in history, you've seen it too, that typically you get above 100 and strange things happen and it's not sustainable. Pierre, do you get the sense that things are different this time? Goldman's talking at 115 on Brent over the next month.
Yeah,
I'm trying to think about what numbers you're thinking about and how sustainable you think they are.
No, I don't think that $100 is unsustainable. I don't understand why people would think that. I mean, we had a period from 2011 to 2013 where Brent was $111 in average, which is $150 of today's dollars, and the economy was okay. That was during the European crisis, and we had a large supply growth in US shale at the time. So I don't see why people would think that $100 is high. Sure, it's higher than the last few years, but by historical standards, the average of the last 14 years for Brent, inflation adjusted, is $96. The high of 2008 at 147 is equivalent of $222 today. So I don't know why suddenly people think that $100 is so high. Sure, it's only because they thought that because of US shale, we'll never see $100 again, but that was a wrong view to start with. I think the economy can support it. The economy can support 120, 130, 150. It's just really psychological. I mean, I remember in 2004, when I was quite bullish, oil was at $33 a barrel, and I thought due to the long-term fundamentals that oil would go up to $100. And at the time, people thought that $33 would kill the US economy, and that was obviously proven wrong. I don't think there's so much impact on the global economy. I think it's a lot more inelastic than we think.
Pierre, awesome, as always. It's been too long. Let's catch up again soon. Stay close, please. I'd love to catch up through the next couple of weeks. Pierre Underon there on the situation in the commodity market, $100.61 on Brent. The news coming from Fanny Birol of the IEA. We will hold an extraordinary ministerial meeting tomorrow on the impact of Russia's invasion of Ukraine on oil supply and how IEA members can play a role in stabilizing energy markets. More still to come from New York City. Thank you for being with Bloomberg TV. This was the Countdown to the Open.
this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi-Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, Pepsi goons bomb their own trucks. And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi Number Fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's Number Fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack on the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained one man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Benegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Benegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Benegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Weinergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Weinergold as an opportunity to leave that troubled home. Weinergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there, like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is, when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small and space is really big. And then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's just kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. Asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000.
Here's a stock that can change your life.
I see a stock going up and I buy it and I just watch it until it stops going up and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers, one of the last holdouts in the world of disruption, finance, is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
There's Fidelities in the Schwabs and the E-Trades of the world. They look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was